Yo, what's up, everybody? How we doing today? Great day here, guys. Today we have an amazing session for you planned with Chief Market Strategist Matt Maley. My name's Rodrigo. We're going to be going over a couple of topics today. Want to give some shout outs here. Raj, number one, you deserve a shout out. He sent me a nice email. I'll let you know about him later in the day. US Dot, too short. We got Steven in the house. Ray, what's up? Fantaka, Clean, Ale, what's going on? Hope everybody's having a great day there. I know it was an amazing day in the chat room and for the stock picks with Matt Maley, and we'll go over that. A couple things, guys. Let me know in the chat when you guys are ready to start. So in the YouTube and in the Zoom chat, let me know. And I wanted to also, a lot of you guys were asking me where Matt was all this time. Well, Matt was in the live trading room with all his members. Today, they had some really good fun with. So he'll tell you what happened, and we'll tell you all about it. It was a great day in the chat room there, but we're going to be talking about the strategy, the Matt Maley strategy, right? Sector scoping, options education, setups for equities, crypto options, commodities, buys and sells, charts, market discussions. Stick around until the end because we do have a really good Q&A there on Matt's strategy and the chat room itself, and a real-time Q&A, real-time view of the Inner Circle live training room with Matt Maley, Chief Market Strategist. 40 years in the game. You guys already know him. M. Moulton is ready. Steven's ready. Lifestyle Joseph's ready. Jumitzer's ready. Let's go ahead. Let's bring on the man of the hour here, Matt Maley, back in here. Let's go. Let's get him here.
Hey, Rodrigo, how you doing?
Matt, great, and I hear that it went really well. You just got off a Bloomberg interview right now, or something?
Yeah. It was. I wanted to. I want to make sure I gave you guys a call just to make sure. It's like if you see me on Bloomberg, don't worry, I'll still be there. I'll still be ready at 5 o'clock. But I told them that they called me because I've got some great calls in the market. They literally called me right after the close to say, could I come on between 4:30 and 5? And I said, you make it closer to 4:30, I'll let you do it. In fact, I still got my time. No worries. Well, number one, I just want to start. I know that we're going to talk about everything that happened in the live trading room, but I just want to start with one really nice email I got today from somebody that actually joined about 2 days ago, a couple of days ago, actually. His name's Raj. He wanted to reach out, but he doesn't have your email. He just wants to say, hey, Matt, and this is from his email. He's in this session right now. I just want to thank you for your suggestions today. I signed up Wednesday last night after your webinar. I'm new to options. I didn't understand completely the thought process. I followed all the trades you suggested today, except for the hedge on the SQQQ, because I didn't understand what the suggested ratio would be. And then he says, and maybe leave. So at first I was debating myself. I thought it was a little bit too advanced for me, right? But then today I'm so happy that I already made the money I spent to join the chat room in the Inner Circle group. So please forward this to Matt because I don't have his email, and let him know. And I thought that I would just let you know here because it seems like, and I got so many emails like this today. So I know what I was in the chat room, but I got a lot of emails from people like this. So what happened in the chat room today, Matt? Well, we had a really good day. I mean, it was kind of funny because we've had several good days lately, although we've had a couple of, let's say, rough days, but and nobody's bats 1,000, so we certainly don't make money on every trade. But the big thing right now is that we want to be able to make money in both directions in the marketplace, and the tools are finally there to be able to do it. And we certainly were able to do that today. In fact, we made money kind of on both sides. We bought some call options late yesterday, very small call options, and made some money there. And the QQQ was called the TQQQ. Took profits right shortly after the market opened, and then we flipped right back over and bought some bearish bets. In the first it was before the first hour of trading was over. They were up well over 200% by the end of the day, and we took profits on those as well. We also have some other ones that we kept and holding to see what happens next week. And we'll talk about that and why I took some profits on some and why I held it on the others. It just has to do with risk management. I do think the market's going to go lower next week, but I could be wrong. And why leave all those profits on the table? You got to take some off and manage your risk correctly.
Yeah, and the great thing is that this is what I've been telling traders. And look, I mean, even if you don't want to get into options, at least knowing how to buy puts and everything helps you out so much. Like for example, this username Stretch, I don't know the name of this person, but the username is Stretch, and this is from today. I was just looking. Um, he says money returned for my investment Wednesday as well. So other people as well on the top were posting that. He says, "Thanks, Matt, and the inner circle. I've never profited on the downside before. This is fun." So it's great that you're able to help traders even when they're new, because this is so important, right? To be able to know how to take advantage of the volatile markets instead of being afraid of them, which is really, you're like, hey, let's embrace the volatility.
Right.
Let's profit from the volatility. And this is really your strategy. So what else can you, what other times, or maybe you can show us some things in your, if you have, maybe you can show the folks a little bit other times, or even as recent as today, or
Right.
what?
Yeah, I mean,
other examples of.
I will definitely show you that, and I'll do that literally in just 2 seconds. And one thing I'll just say is that the great thing that we have is that, and I've said this a lot in other talks I've had, is that the individual investor finally has the tools to take advantage of downside moves in the marketplace. In the old days, only the institutions had that. And yes, you could buy some put options, but they were all quarterly options. So say if you were nervous this week and you said, geez, I want to buy some S&P, some puts on the S&P or puts on the NASDAQ, I'd have to go out till June to buy those. I'd have to, as I said, I have to go out to June. June, I mean, there's a lot of time value and a lot more risk for those people who sell the options if you're going out 3 months. So they give you this huge amount of time value that they add on to the cost of buying that option. And so it made it much, much more expensive. But now, of course, we have weekly options on all these individual stocks. And on the big ones, the big stocks, and even a lot of the medium-sized stocks, they have weekly options. So if you want to buy a bearish bet on Apple, you only have to go several days. And if you want to do it on one of the indexes, on the S&P or the NASDAQ or the Russell 2000, which is the small cap index, they have all ETFs that trade incredibly liquid. They're incredibly liquid, and they expire 3 times a week. You only have to go out a couple of days if you want to make a short-term bet. I mean, if you think, geez, oh my gosh, I think this weekend's going to be really tough, or some Fed meeting is going to be really tough, I think the market's going to go down in the next week, but I've got to buy options way out in January. I'm not going to make, way out in June, I'm not going to make much money because the person selling them is taking so much risk. Well, now that person selling them is only taking 1 week risk. So so you can go out and buy those things. And we also have inverse ETFs, and we have leveraged inverse ETFs. Earlier this week, we had somebody ask about, geez, I'm not really new with them. I'm new to the options. And so I suggested the SQQQ, and I gave them a good stop level. And they didn't go through that stop level, and it minimized the loss. So the person would, assuming they took a 4% loss, and then you move on. That's fine. It's all about risk management and such. But the point is, back in the old days, and it wasn't that long ago, even in 2018 when we had that 19% deep correction, a lot of these tools were not liquid enough to really use, and they certainly weren't around in 2009 or after the dot-com bubble burst. So again, the big institution guys could play in that game, but the individual traders couldn't. And now we can. So let me just to talk about what we've been doing here. And oops. Can you allow? Oh, there we go. Okay, hold on. Sorry.
Yeah, really quick. And if you can see that, you can see right there, Tammy sold my SPY put for 120% gain. And I mean, I can't wait to hear this from your end, like your thought process when you're analyzing this. So let's go ahead, Matt.
Yeah. The whole thing. Well, again, let me pull up the screen share. Let me just do this real quick. It'll only take me a second because I'm going to show you the actual options that I did. Whoops. I did play in today. Sorry. There we go. Just take me a second. But the whole thought process was that we had some, we had some earnings this week, but nothing really, that were positive. But when Apple came out last night, and even though their earnings were not horrible, but their guidance was disappointing, and the stock was down overnight like 4%. We came in, it was only down 2%. But then right at the beginning of the day, the market actually rallied up, the stock rallied into positive territory. That's when we took profits on the TQQ calls that we had. But I just said, this is crazy. There's negative news out. This market's not going to hold up. So at 10:30, or I'll do the exact time, I think it was 10:25. At 10:25, I went and bought some QQQ puts. Okay, these. Let me make this bigger so you can see it better. Hold on. So let me take a second here. But here are the May QQQ. These are the ones that expire on Monday. Now we could have done them, one day, but that's taking a lot of risk. I could have bought the ones that expired that day. Plus, there are some of the people who are new, and their brokers won't let them buy options that expire on the same day that you buy them. So I wanted to go out to Monday so that everybody could take advantage of it. So anyway, you can see here, right here at 10:20, I think this is 10:25. We bought these QQQ, again, that's the NASDAQ 100, the NASDAQ ETF, May 2nd, that was the expiration date. That was on Monday. So I'm very specific on these trades, not just say, hey, you ought to short the market here. We say, buy these, the $320 put options. And sure enough, we bought them here and they rallied. We held them all the way till almost the end of the day, not quite the end. And we made over 200%, over 200% on those just today in one day. But again, when we saw the market, I saw the market breaking down. We saw, you use number one, the fundamental situation that's going on with the marketplace, high inflation, Fed meeting coming up next week, concerns over stagflation because the GDP numbers were down yesterday, right. But also you can technical analysis. And when we broke above these key resistance levels each time, we made a higher high. I knew this thing was going to fly. Right. Now, 3 minutes after I made that trade, I made another one. Whoops. On the May 2nd, 318. So the other one was a $320 put. This one was a $318 put. And again, this was at 10:28. It was only 3 minutes later, but I saw the market sinking and I said, we got to get more aggressive here. This is breaking key support level. This rally, this very early rally is a big head fake and we're going to go lower. And sure enough, we jumped on 3 minutes later. The QQQ May 2nd, again, the expiration date was Monday, $318. That's a strike price put option. Didn't sell them right at the close, but so you can see where we sold them, not at the absolute high, but very close to it, and made almost 230% in one day.
And so you still made it on time to the interview. And
I still made, yeah, exactly. We were talking in the chat room because we own some other options. They call the SQQ, which is the 3 times inverse ETF. And we own options there. And I told people, hey, if you didn't buy the QQQ puts this morning, at least sell some of your SQQQ options. And again, they're actually call options because it's an inverse ETF. But the point is they were another bearish bet that we had on. And I said, hey, listen, I'm going to hold on to mine right now, but because that's because I'm able to take profits on some of my bearish positions. If the only thing you have are the SQQ options, take some off, not all, but take some off. I do think we're going to hit them. But the last thing you want to do is go over the weekend with a really profitable trade and have something happen over the weekend to make it
right.
a lose trade on Monday.
So, and I just want to mention, guys, right? So, like, keep in mind, even if you're new, you're doing the simplest type of option trade. So that's why the title is, where Matt is using simple options, right, to profit in volatile markets. This is not you're not doing spreads or condors or butterflies. You're doing basic calls, basic puts. Matt is choosing the contracts for you. And if it sounds a little bit advanced, trust me, Raj felt the same way. He sent me the email and, and sometimes it's at the end of the day, really, you're doing the most simple type of trade. You don't need, it's just buying a call, buying a put, and Matt will pick it for you. And you're there all day, right, Matt? Monday to Friday?
Right. They're there, basically get on around 9 o'clock. Yesterday I didn't get on until almost 9:20 because my systems were down. They were just doing some work in my office, and so I had to power down. I couldn't power back up. Thank God I got on before the opening. But around 9 o'clock. And again, if there's big news, I'll be on much earlier than that. If there's a big employment number, something like that, or if there's news overnight about whatever, some war starting or something, I certainly get on earlier. And I'm on till 4:35. Just depends on the day. But when the markets hours are there, I'm monitoring everything. Obviously, I have things that I do during the day, so I'm not watching 100% of the time. But when when I'm off, I come back and scan through, look, try to answer any questions I might have missed. And it's worked out. It's worked out real well. And the thing is, though, I guess the important thing that I want to highlight too is that we don't just talk about my ideas. People are throwing stuff. I mean, that's the thing is we have 2 pages. One is the main page, and things are just scrolling by all day long. Comments, questions. We'll joke around a little bit, have some fun. I mean, I talked about this morning how I was disappointed that I didn't get drafted in the NFL draft yesterday. Just having some fun. But well, that's my wife, but she's gonna have to. She knows what I'm doing, so she'll have to call me back. Anyway, so anyway, so we talk about things as people call up and say, "Hey, listen, I've owned this stock for a while. I'm losing money on it. What should I do? Should I sell it? Just take my losses?" Things like that, or should I hold on to it, double down? I'm not a big guy on double downing if you've got a big loss, but if you've got small losses, you can kind of average down. But
well, Matt, that's actually kind of a little bit what I wanted. What I wanted to emphasize, that you do have a lot of active traders because hey, they want to make the most amount of money in the little.
All right, I'm just going to talk to my wife real quick. I am
Yeah, no worries.
my okay webinar. Okay. Said, oh, sorry, forgot.
No worries. So you have the fast trader, and this is really a lot of people like it because hey, you're not going to make 200% doing spreads or anything like that or buying and holding on this market. But so you offer that type of trade, but also for the person that maybe wants something like a swing, or maybe, hey, Matt, I want to buy a stock that maybe I want to hold for 5 years or 10 years. You're able to offer not just the live trading where it's like, I'm buying this call in, we got the Fed meeting tomorrow and we got this and that, which is like, you're in the trenches there every day. But then for the people that maybe want to take swings, maybe people that have a full-time job there or something, and they want to do another type of trade, you do have that, right? The people ask you for swings. Yeah.
No question. I mean, and like I said, people ask you about stuff all the time. And we have this separate page too, where it's kind of called Matt's key or important comments. And in that thing, because if people are making comments all day long, you can easily miss things if you're not watching 100% of the time. But for any kind of number one picks I make, in other words, a trade that I want to do, I put that in there. And there's only several of them every day. In other words, there'll be some trades in there every day, both when I get in and when I get out, but also important comments. Hey, this is something we need to be careful of. This is something we're watching. Oh, hey, here's a stock that I think I'll like if it gets down to this level, type of thing. But I keep those to a minimum. So if you're not watching it all day long, 100% of the time, you can look at that page whenever you want and get the key issues that I've been talking about.
I think it's important to kind of go over your background because that's really important. You have about 40 years in Wall Street. You've been head of trading, managed Fidelity, BlackRock, 2 of the biggest accounts in the world, chief market strategist at Miller Tabak, on demand all the time. Bloomberg wants you like on the spot. So tell us a little bit about, your background so that the folks here can understand a little bit.
Yeah, we had I started on Wall Street literally be 40 years in Thanksgiving this year, just after Thanksgiving. And, as a strategist that I've been in the last, almost 15 years now. But before that, I mean, as a strategist, a lot of these strategists are all analysts or economists, former analysts or economists, and they talk about the theoretical things that work in the marketplace. I try to focus on what's going on, what's really going on day to day and what is going to happen, not what theoretically should happen. And I got that backing from that background from working on 2 of the biggest trading desks on Wall Street for 25 years. Solomon Brothers, younger people may not be familiar with that firm, but in the 70s, 80s, and 90s, it was the most important trading desk in the business. And there were other firms that, like Goldman Sachs, Morgan Stanley, that were more powerful in the banking side of things. But in trading, Solomon was king, and Goldman was on par with us. But we were the ones. Now I wasn't there in the 70s, but I was there for 15 years in the 80s and 90s. And then I moved to Merrill Lynch, was one of the biggest trading desks, the biggest trading desk on Wall Street for another almost 10 years. And again, you feel about it, all these things that are theoretical, what should happen. When you're trading day to day, you've got to know what is going to happen and cut your losses when you can. So for we all have a bucket of in a portfolio that's in there for the long period. And that's great. For 3 years, 5 years, 10 years, even longer, that's great. But for those who want to trade a little bit more actively and you have that other bucket, you have to look beyond just the fundamentals. I mean, I initially was going to call my kind of my market letter and stuff that beyond the fundamentals, but there's just so many other factors that come into whether it be technical analysis, which I use all the time, which is, by the way, is fundamentally based. We have sentiment, because when things get too bearish or too bullish, the market usually bounces, goes back the other way. Same thing with positioning. When too many people are long, the market usually goes down. When too many people are short, the market usually rallies, et cetera. We talk about all these different factors that come into the more active trading, and it's worked out really well because a lot of these guys. I mean, we had a guy just this past week. He's been a strategist a long time and pretty well known, I guess. But and he's talking about we won't get a capitulation move, and he obviously never worked on a trading desk. There is an outside chance we won't get that big washout move, but it's the odds are very low because there's huge amounts of leverage in the marketplace. We know that we can measure it through the levels of margin debt, and when when people get margin calls, you get that forced selling. That's what people all think that these big sell-offs, these capitulation moves, these washout moves, take place when the market gets because people panic. Well, that's part of it, but that's not all of it. In fact, it's not even most of it. Most of it happens because both institutions and individuals get margin calls, and they have to sell. They have no choice. They don't care if the stock is cheap. They don't care if the stock is oversold. They have to sell to meet a margin call. That's the thing that creates the big washout move, and that creates the big opportunities. And something we could be seeing even as early as next week. And we'll talk about more of that later. But the point is, these are the types of things that theoretical people don't understand because they learned all their stuff in a book, and not in the real world where they made or lost money. And when I worked on the trading desk, I covered, as Rodrigo mentioned, I covered the trading desks of many of the biggest institutions in the world. Fidelity, Fidelity, in the mutual fund side. BlackRock are the biggest hedge fund, many other hedge funds, many other mutual funds, insurance companies, banks, et cetera, covered many of them over the years. And so you really get to feel what the best and the brightest, what they're doing, what they're trying to do, what customers are trying to do, what brokerage firms are trying to do. And luckily, when I moved to Miller Tabak, it's a much smaller firm, and the reason I made that move was that they basically said you can do whatever you and you can, your opinion is yours. Don't worry about whether it's bullish or bearish. A lot of the big the bulge bracket firms, they're paid to be bullish. And now and what works so well right now is that when you're bullish or you're bearish, you can play both sides. When the old days you can only play the bullish side. So this is something that has worked real well. And again, like I said, because I have the because I have the oh geez, I should have put that up, and I'll pull it up later. But anyway, because I have this experience on the trading side, not just the theoretical side, we've been able to make some really good trades this year. I'll talk about one that we made earlier this week, just this week. We talk about ones we made today. Earlier, and this is one that we actually made. I'll talk about a swing trade that we bought. I bought several weeks ago. You can see back on April 11th. And they went down, but I was very confident. I wasn't worried that they went down a lot, to be honest with you. And we bought some more at a couple of places along the way. But see, we sold some of those early in the week, okay, with an 82% gain. We actually sold even more today with a much bigger gain because the VIX had really shot up. But that's one we made earlier this week. And then also I talked about the SQQQs. Here's one that we bought on. Excuse me, let's move this over a little bit. We bought Monday at the very end of the day, went in very end of the day, said, let's buy some of these SQQ. Again, whenever I give it, I get very specific. Whatever the asset, in this case, an ETF, the ETF or stock, the strike price, the expiration date, then the strike price, and whether it's a put or a call. In this case, it was a call. And again, we held it through the day on Tuesday, and then sold it. It was funny because here we got real nervous. It's like, oh my God, the thing came way down, but we held on to it. I really thought the market would sell off. and sure enough, you made 200% on that one as well. So the VIX option was 82%. We've had others that made in the hundreds just this week, several of them. We've had some ones certainly that have lost money, but that's one thing in the options market. You can kind of make things both ways, and there's plenty of other examples that I can and will go over that we've had, but I just want to see. I gotta click on this again.
You haven't even. Well, I know that for everybody that doesn't know, Matt Maley has the record at Benzinga for the biggest percentage gain on the trade. He'll let you know. It's the FXI trade. Some people made like 11, 12,000, some crazy number.
Yeah, this happened early on. It's the thing is we talk about is that we don't just focus on U.S. stocks or U.S. ETFs. We go look at global things. I mean, we made some money in the TLT. I was a little early on it, so we lost some money in that first initially, but made some money back in the TLT, and that's the Treasury bond ETF. But this one was on the China, the situation in China. And what I did is I looked at, see, here was it says last weekend's chart, but that was when I sent it out in March. So this is an old chart here, but the point is the FXI, which is the large cap ETF, Chinese large cap ETF, had become ridiculously oversold. And even though I'm bearish and remained bearish at the time on a longer term basis with China, but they were, the thing is, it just gotten out of control. They had, cracked down on many different industries. So that's what, last year, you can see their market just went down all year last year. Then in March, we came out with the SEC, we start talking about, delisting many of the big tech China companies. And this is when this took place. And so I was like, okay, that makes sense. I'm negative, this all works. But see this is what relative strength index, RSI, okay? It's just a measure of tells you when a stock is very, very oversold or very, very overbought. And the red line, when it gets above 70, tells you it's getting overbought. And we usually like to see it above that line before you get too negative. And then when it gets, it's a red line because it tells you stop buying. And when it gets below 30, that's when it gets, it's green. It's green line because that's the time to buy. You can see here it got below that line and see it saw a nice rally for it. It's a short-term play because it's a daily chart. But you see here, that was followed by a nice rally. Here, a little bit of nice rally there. Here again. But look how ridiculously oversold it got right here. And I was like, okay, I held off. Finally, I said, this is ridiculous. This is the most oversold reading ever for the FXI. So I said, let's go in here and let's buy some call options. Again, so just because I'm looking to make money and I've been able to make some money in nice options trades in the in some downside bets, there are going to be plenty of opportunities to make money on the upside bet, and this was one of them. And we're coming up with this market starting to get a little washed out, not there yet. We're going to make some money on the positive side. I guarantee you that in the weeks to come, maybe even next week. But see how this got ridiculously oversold, and so I said, let's go in, and sure enough. Look what happened. Huge rally, 27% rally in the index. That's not in the options. You see how it bounced back, that RSI bounced back. So I used the fundamental aspect of it, even though I was still concerned. They'd priced it too much. And so I used the technicals and also sentiments. The new sentiment had just gotten ridiculously bearish. Just talking to customers, I still talk to the institutional customers and just reading the financial press, et cetera. It was just gotten too bearish. And it was just ripe for a rally. So 27% rally in the FXI. Okay, that's good. But I went in on March 15th, right here towards the end of the day and said, let's buy the FXI March 18th, $30 calls. Okay, and sure enough, they absolutely took off. Okay, as you can see, by in the first hour of trading, they were already up almost 3,000%. And I said, we can't get greedy here. Let's take some profits. I very specific. Don't take all profits. Let's take some profits here. 2,900. Basically 3,000%. Then as we got to the end of the day, I was like, oh my gosh, this thing is. Let's not get greedy. Now we're up almost 8,000% on the rest of it. Let's sell it there. So it worked out incredibly well. So it turned out there are others, and again, people are more than happy. They don't have to listen to everything I say. Sometimes they buy things before I do or after, or maybe they wait an hour or two, or maybe even a day or two. In this case, a couple of people who contacted Rodrigo later said they held on to it and made, I think, about 14,000% by the next day. So again, this is not something that happens all the time. We've had 2 trades like this, one each year. We had one last year, one this year. The other one was in Viacom. Last year we made 2,500%, where others made 5,000%.
Really quick before we go into the Viacom trade. So David, he's from the chat room. He says, I think I remember spending a few $100s that ended up going to $3,000, and I sold before Matt did. So I did leave money on the table, but it was a great trade. So, but that's the thing, the volatility. Like, you find that, and on top of that, if just for everybody to know, Matt is not just looking at U.S. equities. He's looking at the literally entire global market. So that's why you come across this.
Exactly, and don't ever. I mean, if you leave money, you're gonna leave money on the table. I mean, Baron de Rothschild, the richest family in the world. Of course, nobody really knows how much money they have, but they've been, the kings of finance, global finance for centuries. And the original guy, they asked him, "Wow, how did you become so rich?" And he said, and his answer was, "I always sold too early." And so if you're looking for that absolute top, you're never going to get. If you do, once in a blue moon, you'll get the absolute bottom or the absolute top, and maybe once in your life you'll get both. But those are those are, anybody who tells you they get that all the time is lying. But who cares? I mean, who cares if you didn't get 8,500%? If you got 70, if you're worried, if you're mad at yourself for leaving some money on the table when you make over 1,000%, make several thousand%, you shouldn't be doing this. Your personality is such that you'll just drive yourself crazy.
And just for everybody to know, this was like you said, this is a lotto ticket. You told me this is a lotto ticket, and right, because from what you're doing, trading calls and puts on the Qs, that's from what I'm seeing, anywhere from like 50, 100 to 300-400% around in that range in this volatile market. But for a 7,000, 8,000%, like that has to be a pretty volatile thing. Yeah, like crash or something like that. Yeah.
And the thing is too, is that with these things, and we've made a lot of money trading stocks like NVIDIA, Advanced Micro Devices. Now everybody thinks that they've got to trade these obscure penny stocks to make the big money. In the options market, it's actually better to be in these liquid names, especially with the market being as volatile as it is, because of seeing the big wild swings. So you can be in an Apple and say, oh my gosh, I lost a big chunk of money, and maybe I lost 20%, 30%. Some of these penny stocks, and you wake up the next day and the company's disappeared. I mean, it's gone under. Apple's not going under. I mean, in an option, of course, that option can go to zero because you have an expiration date. But the point is that you can make money, and we do make money in option. And it says, well, geez, the market only, on a big day like today, the market only might move 4%. Well, you can still make several 100% in the options with moves like that. And so these people say, geez, I want to own that penny stock so I can make 500 times my money in a week. Well, actually you can do it in the Apples and the index ETFs, et cetera. So we try to take advantage of that, and not just because so many of these obscure stocks, you're just guessing. You just have no idea.
Yeah, well, nobody even wanted to talk about Chinese stocks at all. Like, no, it was at all. And so not only is it a great opportunity, but nobody was looking because they just simply didn't want to. But you're looking at this from a trade perspective,
right?
And that's really key, that you're looking, that paying attention to these things. Yeah,
right. Exactly. That's what we're trying to do. Is because when things become completely unloved and completely oversold and completely say unloved or overhated, maybe a way to put it, and sentiment gets so bearish, and then people get overshort, it creates an unbelievable buying opportunity. Even if that company is going to, it's a company, it's a specific stock, even if they're going to go out of business. Again, I'm getting exaggerated, but if it's if it's an Enron, that's a problem. But if it's a company, they're going to have some real problems and in the next 3 or 4 years, but they're still going to stay in business. It doesn't mean the stock's not going to see a big bounces. And the same thing with you look at Amazon. I've said so many different times over the years, Amazon is, it's changed the world in the last 25 years, changed the world. But just in the last 10 years, they've had 24 corrections of 20 to 60%. Okay, 24. So it doesn't, I mean, last year, 2021, one of the best years for the stock market, not only because it went up 20 some odd percent, it was 28% in the S&P, but it only had one correction of more than 5%. And that one correction lasted for one day. I mean, it was only down 5% for one day. And yet Apple Computer had 4 or 5 corrections of 7, 10, and even close to 20%. Unbelievable company, unbelievable prospects, unbelievable management. But it's still, when your markets are volatile, you have a lot of leverage in the business, in the marketplace, you see these wild swings because things get way ahead, even though they're really good companies, the stocks get ahead of themselves and they come down. And even in stocks for really bad companies, people get too negative, they short them too much, and they see near-term bounces. And that's what we're trying to take advantage of. And again, you have a couple of different buckets. One is a very long-term. If one of those buckets is a short-term trading bucket, this is the time. I mean, this is really a great time this year to benefit from those and maximize your returns rather than trying to hold on to. As I hear so many times in the financial press with certain pundits, and they say we're going to help you weather the storm. That is important, and I'm trying to do the same thing. But I'm also trying to help you profit from the storm, and because at some point we're going to get a bottom, and people are going to be selling at the exact worst time. And not only when you've not only not lost money, you've actually made money in a down market. Now you've made money. How much confidence are you going to have to buy when the market's on its lows? Those people are like, I can't afford. I've already bought on my way down, and I've gotten killed every time, so I can't buy anymore. I'm done. Get me out. Where you and for us who made money on the way down, it's like I think this is really a good time. You have the confidence, and then when the market starts to rally a little bit, you add to your position. When those people who are scared to death and haven't made any money on the way down, the market bounces just a little bit, they bail. Okay, I mean, coming out of the great financial crisis, the bottom came in 2009. For the next 2 years, actually, I think it was the next 3 years, but more than 2 years, the money flows of mutual funds consistently went out. Okay, people were like, oh, finally, I've made some money back. Let me get out. Well, I can't blame them for doing that. But those of us who are making money on the way down are the confidence to stay in the next bull market, and that's where you really make the money. When that's how Warren Buffett made his money. When there's blood in the streets, he's the one who's buying, and he doesn't bail shortly thereafter. He holds on for a long time. That's what we're trying to maximize returns and use some good risk management where we're going to have some losses, no question, and try to manage them to a degree that keeps us from. Which keeps us from losing a lot of money and helps us make money in very, very difficult times. And again, I think this is something that will continue. Okay, what time? I just want to see here.
Yeah.
Anyway, so go ahead. I'm sorry.
Yeah. So I was just getting. I'm getting a lot of emails here with some questions about the live trading room. So I just want to knock those out really quick here before we carry on here with the session. All right, so these are the questions from you guys in the, for those who are on the Zoom or on the YouTube. You guys are, these are just questions you guys have been emailing me. So, is the live trading room? Is it live? So yes, the trading room is live. It's Monday to Friday, and it's open 9 to 5 p.m. Monday to Friday. That's the schedule. There's also a session on Tuesdays. And that's about 11:30 a.m. Eastern. You meet for about 30 minutes around there, 30 minutes around there with Matt. Does everybody that joined get a free laptop? Yes, good question there, Phil. Can this help me if I trade crypto or just stocks? Yes, good question. It can help you with that. We're going to go over Bitcoin later, but yes, it's for people that trade that as well. Is this for new traders or advanced traders? It's for both. We do have advanced traders there, but really the simple traders can get along, can get on just as quick because what we're doing is so simple. It's the same, we're buying a call or we're buying a put. So there's never anything complex, right, to that. So everybody carries on. Next question there. Chat room schedule, that's Monday to Friday. We went over that one. Does Matt Maley trade around earnings or Fed meetings or special events? Yes, he does provide those specific trades. Money back guarantee. Yes, there is a 7-day money back guarantee, and the price at renewal is the same as it will be now tonight. So that's 70% off till midnight. Good questions, folks. I think with that, we covered them, most of them, so that we can go ahead and carry on here with the session, Matt.
Great. Yeah, I just wanted to see if I had, we're talking about some December. Yeah, okay, good. Here. See, we were talking about, you just asked about, do we trade around situations here? We had in December, reason why I tend to do the QQQ calls when I'm doing index options rather than SPY, but people do both all the time. And believe me, you'll get plenty of ideas from people in the chat room. I'm not the only one providing ideas, which is really, really great. And then the last, my opinion on, there was one on was it Shopify or Spotify? I can't remember which, where people were saying, should I buy the stock? Should I buy the stock? And I said, the technical setup is that if they report decent earnings, this stock is going to fly. However, I'm just not convinced enough. I'm not going to buy the options. Well, there were at least 2 people I know on the chat room that did, and they reported good earnings, and the stock was the call options were up 500% the next day. I didn't get involved in that one. It was just people in the chat room. So those are the things that happen quite often, and it's not, that's not just a one-off thing. This is something that happens quite often. So and people will come and ask, what do you think about this? What do you think about that? And I'll give my opinion, and some people go ahead and, even if it's against what I'm thinking, they go ahead and do it anyway, and it works out very well for them. But here was a situation. You talk about the Fed. We had the Fed meeting. It was a Fed meeting in December, and this was when we were going to get the confirmation about whether Chairman Powell was going to confirm what everybody else had been saying recently, that not only are they going to accelerate QT, in other words, the shrinking of their balance sheet, but they're also going to raise interest rates starting sooner than people had thought. I mean, people were thinking there's no way they'll start raising interest rates until sometime next summer or even next fall. Back in the fall of this past year. And then we started seeing a lot of Fed speak, a lot of Fed talk come that way. And so the Fed meeting was coming, and Powell was going to, we were going to say, okay, he's going to tell us whether this is true or not. And sure enough, on the 15th, which was the day of the meeting, I came in, the market had sold off going into that. Everybody's, we're going to get that confirmation from Powell. We're going to get that confirmation. Let's sell off the market. And I said, but it's getting too negative. People are just too negative. So I came in and said, let's buy the QQQ December 17th, 392 calls. We bought them here. We caught them at 1:30. The Fed meeting starts at 2. I'm sorry, take that back. The Fed meeting goes for 2 days. The Fed announcement comes at 2 o'clock. And the press conference comes at 2:30, which is what we'll see next week, next Wednesday. And so I said, let's go in. This is getting too much. Let's buy the call options. We came in and bought them. Sure enough, when the announcement was made at 2, they rallied up nicely. When they came down a little bit, but I still liked it. And then at 2:30, Powell started speaking, and sure enough, they shot to the moon. Overnight, now you can see this is the next day. Overnight, they traded even higher. We came in the next morning between 9 and 9:30. I was telling people, we got to sell these. It's got to take profits. Let's not be greedy. Made over 300%. Okay, right near the opening. They sold them right near the opening. And sure enough, it worked out really well because the stock market started to rally. Okay, I'm sorry. Excuse me. Pardon me. The stock market started to sell off. And I knew this. I said, so now here we are at 9:35, and I'm saying, okay, we made some nice profits here. But man, this news really isn't very good. I mean, it's too good. I mean, I understand that Powell wasn't quite as hawkish as people were thinking, but he was still hawkish, still very hawkish. So I said, literally, so here we are, bang. So I'm sorry. So the next day, which was the 17th, the market, the market kept rallying. This is crazy. So I came in just after 3 o'clock and said, we got to buy the puts. This isn't going to last very long. And this was a Friday now. So this is Friday. And so we went over the weekend, but it worked out really well. Sure enough, we went in, we bought the put options again. It's QQQ, the strike, the expiration date, the 20th, the strike price, 283. We came in and bought them. And sure enough, over the weekend, we had more negative news, and more people became worried about what the Fed was going to do. And we made almost 250%. Again, before the opening, I said, let's take the profits. If you'd held all the way until, you would have a little bit more, but obviously they would have gone down. But again, 250%. So I traded. So my point is that we traded both sides of this trade, both the calls, then the puts around a Fed meeting in 1 week, and it worked out extremely well. So that's, again, this is what, I want to answer a little bit more. The last thing I just want to say, well, not the last thing, but one more other thing we talked about with the big trade we had last year a couple of weeks ago in the FXI, the Chinese ETF. We also had an individual stock last year buying some puts in Viacom B. This was remember the meme stocks were all running. And again, it goes back to this RSI chart, Relative Strength Index. This is a weekly chart. Every time it got above that red line, that 30 level, the stock came down. You can see it, all these different examples where the stock, one of them was just a short-term decline. This one was a little bit more. This one was a little more severe. This one a little bit more shorter term. But now look, it got out of control. And it was one of those meme stocks. They had some short interest, and I kept thinking to myself, they've not found the fountain of youth. They've not created the cure for cancer. They're a media company. I mean, they do TV shows and streaming and movies. It's like this is crazy. But it was part of that meme play, and its RSI got to 95. I never seen a stock that bad. So I came in finally and said, let's buy some puts. And sure enough, like I said, the next day we made over 2,500%. Others made 5,000% in just a couple of days. And there was one person who said they made over 10,000%. And theoretically, they might have. I can't confirm that's what they did.
All of these trades came with full entries and exits and sell alerts, just for everybody to know.
That's what, again, that's what we, again, but that, and I do want to say though, I'm going to do something here so you can see. Let's just move over to, this is my Bloomberg, this live screen. I do want to say that I do give other more general comments and don't always give specific trades. But I just, back here, people were asking a lot about Archer Daniels because it had such a great run last year. But I just knew that even though it's a great company with great prospects, great management, it had just gone too far. It had gotten too expensive. And so in technical analysis, I was using this. We had what they call a death cross. Okay, let me get rid of this. Death cross right here, okay? And what's the death cross? When the 50-day moving average crosses below the 200-day moving average. Here is the 50-day, the yellow line. The purple line is the 200-day. But also, it kept going down to $100 and bouncing. Key support. And that's what we tell. It's like buyers are willing to come in. If it breaks support, it means that those buyers are finally throwing in the towel saying, I can't take it anymore. I'm out. And sure enough, the stock got clobbered. I kept telling people, if it breaks below 100, this stock's going to get creamed. And I did not give specifics on that, but some people in the chat room did buy the puts when it broke, and they made some real nice money. So these are, so it's not always something where same thing happened in Tesla just this past week. And I know people made anywhere from 80 to over 100% in Tesla, and it would happen to be the puts in this one as well. And the stock has bounced back since then. But let me just take, this was the 100-day moving average. Oops. Okay, now I'm going to take this back. I'm going to go, what's the date there? 18th. But you see, oops, I'm going to go 17th. Sorry. But you can see how the stock kept holding its 100-day moving average. Couldn't break it. When it finally broke, I said, if this thing ever breaks that 100-day moving average, you're going to make some money in the puts. I did not make that trade, but some people in the chat room came out and said that they did. And sure enough, it dropped below that level. And I think they made 82% on that specific trade. But you can see, well, let's go out to today and look at it again. Today was the 29th. Oops. Why is that adjusted? 29. No, it's not adjusting. I'm not really sure why, but I can just do, okay, oops. TSLA. And you can see that the stock, okay, this is better. Okay, I don't know what I had. I had TLSA, no wonder. I apologize. Let me pull this back up. I had the wrong stock up. I had the wrong symbol. So let's go back, and now you can see what's going on. Much better. But see how it was trading along the 100-day. When it finally broke it broke it hard, and people made some nice money in the puts. Other people made money in the calls this week too. And again, that wasn't my call. That was in the chat room. So they're able to trade both sides of this one. Although I have traded this stock aggressively. I talked about it, although I didn't give a specific trade. I have given specific trades back here where we made nice money in both directions. And the name of that's, again, when you have weekly options, you're able to do that. And I think with the market getting washed out, there's going to be some stocks that are really beaten up. And you can buy a JP Morgan. I mean, is the JP, you're going to make 5 times your money in JP Morgan? Of course not. Can you make 5 times your money in JP Morgan in their options? Maybe not that much, but you can certainly do very, very well. You see this stock is getting oversold. It's RSI chart right down there. Let's look at its weekly RSI. At some point when this market gets washed out, you're going to be able to get Bank America and JP Morgan, and you're going to be look see how it's that weekly is getting very oversold. You can say 2016. This again is an RSI, relative strength index chart, and see how the only time it got more oversold than it is now was when it was during the depths of the pandemic, and that's when the whole market, the economy was freezing up. So I don't think we'll get that oversold. For a stock like JP Morgan to get that oversold, tech stocks and can always get very oversold or very overbought. JP Morgan is not going to get that. It's probably never going to get that oversold again, at least not for a long time. And so this is going to be at some point next week. It's going to be, I think next week, but certainly soon. It's going to be a great buy where people are going to be able to make 20%, 50%, and I think even in the hundreds, but we'll see what happens. But again, it just goes back to what, if you use your head, you don't have to buy some obscure stock that nobody's ever heard of that might go to zero tomorrow to make some really good gains in the trading area. And so this is what what I'm trying to help people do, and on a regular basis, it's worked out really well. We've had a lot of good wins. I don't bet 1,000. We have losers, there's no question, and we try to manage those losers. And even there are times like today, late in the day, in the middle of the day today, I bought. Remember, I said I bought some QQQ calls, and we made 200% on those. But I'd also bought a smaller amount of QQQ call options. So I made big money on the puts, made money on the calls. And so what I did, my thinking was, hey, I think this market is going lower, but I do know that there's a lot of volatility in the market. So I put in a certain amount of money in the QQQ puts, but I put in a very small amount of money in the calls as well. Shortly thereafter, they refer to that as a strangle. And this, again, so we don't get into these condors and big credit spreads and things like that. We don't do that. Once in a while, we'll do a strangle or a straddle, which is just buying a put and a call of the same stock, the same expiration, and a strangle has a different strike price. But see, the reason why we can do this is that let's say you buy $500 worth of a call option, and $100 of a put option. Well, it's like, okay, I'm really thinking, why would you do that? Well, I bought the $500 worth of call option because I think this stock's going a lot higher. Okay, but I know the market's volatile. So if it does go a lot higher, I'm going to make, a couple of $1,000s. So I spent $500 on this one. I spent $100 on the call. I make a couple of $1,000s. Who cares about the $100? Okay. So what happens if I'm dead wrong and the market goes down or the stock goes down? Well, I'm going to make most of what I put into it. It doesn't matter. These things I'm going to lose money here, but I'm going to make up for it in the call. So you decide which one is the one you really. Some people just put an even Steven. They go, I'm going to put in $500 in both, and I'm going to make more than $500, so I'm happy. That's fine. That's a full straddle. Others will do it in a way where they put it and they kind of strangles different strike prices. And what you do is you skew it to one side or the other, where you make big money if you're right, and you lose very little if you're wrong, or even make up.
Really quick, just want to give a shout out here to Kranz. Welcome to the Stock Pick Center Circle chat room with Matt Maley. Let's go. Welcome.
It's one thing just to note. Thanks for joining. Great to have you aboard. One thing to note: Monday. I just made me think about it. Monday in some areas of Europe is May Day, and markets are closed. They're not closed in the U.S., and I think Monday could be a very interesting day. So if you are in Europe and you're going to take the day off, that's fine. Do what you want. But be aware that there could be some opportunities on Monday here in the U.S. We are definitely not closed on May Day in the U.S. I do know. Well, I've been traveling, I was in Italy once on May Day, and everything shuts down. And I know that actual May Day is Sunday, so I don't know if you even get Monday off. But if it is, just be aware the U.S. market is open. And again, with all the volatility we've seen this week, I think there's a good chance that we'll see a lot of activity and some money making opportunities. If maybe not exactly on Monday, but just be aware that it's. I think there's going to be money, and I think next week's going to be a big week. So if we want to talk a little bit about what's going on, I really want to talk about one thing about why next week is going to be so important. And when you're going out and you're talking about these things, it's like, well, of course you're saying it's going to be a big week because you're talking about your product. No, okay, I'm going to show you why it's such an important week. Why I think the market's going to go lower in some sort of a washout move, but it might not. And I want to tell you why I think why it's important. And this goes back to the technical analysis. We are, no wonder. Okay, now I got a lot of lines on here. Let me get rid of some of them. Okay, we don't need the moving averages. We don't need volume. Okay, now, good. Now, here we have, I'm going to zoom this in. Okay, you see this RSI, it's getting oversold, but it's not extreme yet, okay? And this is forming a head and shoulders pattern, okay? So, there we go, we draw that there. You can see, head and shoulders pattern. And this is the neckline. We have a left shoulder, head, right shoulder, or you can call that a right shoulder. Here's the neckline. We break below those lows, it's going to be a big problem. And it's again, we can talk about why that is, why head and shoulders are important. But let's just look at the I keep doing that. Instead of bringing SPX index up, I keep going SPX equity, which is a stock. But here we go. Boom. Okay. Also, it's we've heard several high-profile guys say, I think the lows are in for the year. Well, that went out the window this week, so that's a problem. But this is a key thing. Oops, I'll go back further. I don't want to go overly into technical analysis, but it is an important part of what goes on. And I've said a million times, and it's absolutely true. All the great hedge fund managers of all time, Paul Tudor Jones, Stanley Druckenmiller, any of them, you talk about any of them, they all use it. I'm not saying they use it solely by any stretch of the imagination, but they all use it. Why? Because it works. It's helpful, and it is, despite what a lot of people try to portray who don't take the time to understand it. But this was the trend line. Okay, it was going on for a long time. Anyway, but it is very, very helpful. Now, but the key is, so we've broken this trend line going up in a big way, going all the way back to the pandemic lows. Now we're looking at, one of the things that in technical analysis is that you'd like to see higher highs and higher lows. That's bullish. If you see lower highs and lower lows, that's bearish. Well, and again, there can be mini ones, along the way. We had a nice mini higher highs, but we had a major higher high there. Then a couple of mini ones, and then a nice higher low, a nice higher high. Okay, here we are. We've had a couple of mini moves. Now I'm going to zoom in on it, but look what's happened this year. Again, that's the trend line. We broke below it, but here we got a high. We got a lower low, right? We got a low here, lower high, lower low, a slightly higher high. That gave a lot of people like, okay, we're going to make it. We're going to be okay. But that failed. It was only a slight one. You always have to be careful whenever you break slightly above a resistance level or slightly below a support level. You need compelling moves. And this wasn't a compelling move. This was more like a double top. Now we've made a lower low, and that is not good. Now, if it bounces back immediately, like just this one, we'll be okay. But that has to happen immediately next week. And that's why it's such an important level right now. If this turns out to be a double bottom and the stock market rallies, it's going to be great. But breaking below this, which you mentioned, is also the neckline of a head and shoulders pattern. That is not going to be good one bit. Now I'm going to show you this other thing here on the NDX, which again is the NASDAQ 100. Same type of thing. It made a low, lower high, lower low, very slightly higher high, and now making a lower low below 13,000. That is not what you want to see. Those in technical analysis shows that the momentum has completely changed, moved to the downside. That doesn't mean that we cannot or will not have some strong rallies along the way. And if we get a big washout move next week, if the market falls down, it could, especially, I mean, I've been saying, if you see the S&P fall down to 4,000, we could, this big decline that I'm talking about could happen very quickly, and then we'd really want to get in there and buy it. So again, we want to stay very, very nimble next week. Okay, here, I'm sorry. Apologies. Here we go.
So in a way, people can profit, through these trades, and then there's a correction or a crash or something, and then you find opportunities for them to buy stocks and hold long-term quality stocks.
Oh, absolutely. That's the thing that is good. When we get this big, if we get another flush, 0.1. Okay, sorry about that. I just have fat thumbs there. But if again, look at that long-term basis. You break below that, if it becomes a more compelling break, that's a problem. But it's going to provide great opportunities for short-term trades when you get those big snapback rallies, and it's going to provide you great opportunities to buy some of the stocks that have been absolutely decimated. You sit there and go Peloton. Peloton's been decimated. That's going to probably going to be a great one for a short-term play. Long-term, it might be a good play, it might not. I'm not so sure. But NVIDIA, great semiconductor company. Low. I mean, again, another key lower low. But this is a great company. The stock is getting oversold. This is one when we get the washout move, if we get it, and I think we will. This is going to be one you're going to buy, for both buckets. You're going to buy it for the short-term bucket, maybe buy some call options, and add it to your long-term bucket because it's a great, great company. We look at the same thing with Microsoft. This one, again, I think this is something that's going to last for a while. There's going to be a lot of volatility throughout the entire year. I just happen to think the next week could be one week where we get a big inflection point in the market. So we'll see what happens. But again, Microsoft, it's almost the exact same thing. It has not made a lower low yet, but it's pretty darn close. And again, it talks great company. This is a perfect example of a great company that I turned negative on at Thanksgiving last year. And people are like, "Are you kidding me? It's one of the best companies, great prospects, great management team." And I said, "You're right on all three of those aspects." However, it was getting very, very expensive. No, not expensive compared to bubble proportions of 1999, but very expensive for this particular stock. It was trading at, I think, 38 times earnings. And you think, well, that's really not that bad compared to a lot of other stocks. I mean, NVIDIA was at 75 times earnings, but didn't matter. The thing that really that made me decide that week that it was the time to do it was the CEO sold the stock, okay? He sold $374 million of his own stock. He sold 275 at one point, and then sold another 100 million. Again, he sold the first thing here, sold the rest here, right at the top. People don't sell 2/3 of their personal holdings if they think the stock's just going down for a short time, okay? Because the last 10 years, the last 9 years, Microsoft had an average return of 33%. 33%. The worst year was a rally of 12%, okay? So what, it was 9%. Either way, he had only 1 year that wasn't way into the double digits, average of 33%. And that's not like, because he had 1 year where it went up 100%. No, it was solid, right? Very, very strong. So when those guys sell, it makes me take notice, okay? He did nothing unethically at all. He's the one that made the stock go up. He is an unbelievable thing. The Microsoft had fallen into mediocrity a decade ago. He came in and turned it back around, made it another global leader in the technology space. But look at this, okay? Stock is down almost 20% since he made those sales. He's no idiot. And again, if he only thought it was, even if he thought it was going down 20% and coming back, he wouldn't have made that kind of sale. Okay, the insiders don't sell that kind of stock unless they know something, and I guess not they know. It's not like, oh gosh, I know we have an accounting scandal, and we're nothing like that. He just knew that their stock. It's not his fault the stock got overvalued. Other people weren't. He's just running the business. But he saw what was going on, and he's going to get more stock. All right, he gets stock every single year, so it's not like he's completely bailing on the company, and he did still held on to over $100 million worth of stock. So this is, but. And I've said this many, many times, and those of you are probably tired of hearing me say this, but when the smart money sells, you need to get out. And Goldman Sachs, the partners of Goldman Sachs sold their company in an IPO 1999. What happened the next year? They saw the top of the bubble. They said, this can't last. We're getting out. Blackstone, one of the, if not the most biggest private equity firms in the world, they were private for 25 years. But in the summer of 2007, they decided, this is getting out of control. We're going to sell a big chunk. We're going to sell our company and go public in an IPO. Well, it turned out, in each one of those cases, the partners still held on to some, just like Mr. Nadella is holding on to a portion of his Microsoft stock. But summer 2007, 3 months later, the stock market tops out. We know what happened after that. Glencore, a big commodity trader, in 2011, March 2011, they had been private for almost 40 years. They decided to go public. And 2 months later, a bear market in commodity starts. I mean, they just timed it perfectly because they saw that the things were getting too out of control. And we saw Sam Zell did the same thing. It was a privately held company, so it was just a private sale. It wasn't an IPO or anything. And he sold his real estate company, one of the best and smartest commercial real estate guys in the world. And he sold it right at the top. It was his life. You're trying to tell me, he said, oh, he's got a good price. He sold it because he knew that there was a top coming in, and he stayed in the business, and he's still doing in the business. He's just in a different entity now, but he was smart enough and he saw the top. And I think that's what Mr. Nadella did. It's not because he thinks that, and each one of these cases, hey, Goldman Sachs eventually went much higher, Blackstone much higher, Glencore not yet, but we're now in a bull market that will take it much higher. Microsoft's going to go higher eventually, and again, he's still going to get more stock. But when you see these types of things take place, this is what we look at. And on the chat room, and what I look at as a strategist, and it really, I think, has worked really, really well. And people thought it was absolutely nuts to be negative on Microsoft because the fundamentals are fabulous. I absolutely said, yep, they are, but it's overbought. It's overbought technically, it's overvalued fundamentally, and the CEO just sold a boatload of stock. That adds up to a pullback in my mind. And I've been spot on with that. So anyway, so that's, again, we look at a lot of different things that I try to talk about, and it's worked out real well. And we want to keep doing that and take advantage of these moves. Because I said, there's difference between good stocks and good companies and good stocks. Don't get me wrong. Over the vast majority of time, the stock of a good company will go up. But sometimes it's such a good company that people get too enthusiastic about it, and they get it up too high, and it has to come down. Same thing with the companies that aren't very good. They're not good companies. Sometimes their stocks can be very good stocks because people get oversell it. I mean, it's not a great company, but it's not going out of business either. And yet people want to short it, think it's going to zero, and then they get squeezed. The stock goes up, and even though it's not a great company, the stock, at least for a couple of weeks, can be a great stock. And those are the opportunities that I'm looking for. Don't get them all by any stretch. You can only look at so many, but especially with all the volatility now, the market's been moving around quite a bit, obviously, and individual stocks are flying around quite a bit. Right. But we kind of try to focus on people, on the ones that really have the best opportunity to make us money.
And we've gone over, even though, like you use, let's say mid to large caps, and you use options, and you can get, some really good gains with that. But, some people also in the chat room, let's say they're trading something that's not a large cap. I know that, you were looking at CTRM. We've looked at many examples, Milan Technologies and other examples.
Yeah, CTRM, we looked at 2 days ago, stock's up 16%. I said, this stock was good. I was a little nervous about it because it had a nice run. And even today I was asked about it in the chat room saying it's up 16%. What do you think? And I was like, that's probably ready to take a little bit of a breather, but I like it longer term. And saying, remember Mulan, that the one that you really talked about, Rodrigo, and it's this stock was just, what was it, 90 cents or 80 cents when you came in, and we talked about it right on one of these webinars, and it was again one of all these meme stocks, Let's pull it up here. And you see what happened here. You know, this doesn't look like much of a move, but on a percentage basis, okay. Now we didn't get it at the bottom. We got it right here. Okay, 200% on the stock. That's not on the option, on the stock. Options players made hundreds of percent on this one as well. So, you know, I'm looking, again, if it gets real penny stocks that don't trade at all, I mean, here's a $1 stock, but it trades 34 million shares a day. It's a very liquid name with liquid options and stuff. If it's an obscure name, if I don't, and that's the other thing too. If you ask me about a stock and I don't know anything about it, I'll just tell you I don't know anything about it, and I'm not going to make something up. I'll just be honest and say this is one that I just don't know enough about to give you a valued opinion. And in other cases, I'll say, hey, I don't know, maybe a $20 stock, and I'm just not familiar with it. And I'll say, hey, looks at the chart looks good or bad, but I don't know a lot about the company, and I'll be honest with that. So you know, you can't know every company, you can't know every stock. It's just impossible. And to try to pretend that I do would just be stupid and would not help you. Certainly wouldn't help me. And besides, I'm not going to. No, I don't. You know, again, if somebody asks me something about a stock and I say it looks good, I may not buy it, or if I think it looks bad, I may not buy puts in it or short. Again, I don't short stocks. That's very, very risky. Some people do it. I don't sell options either. Again, if people want to do that, that's fine. But I just want to keep it more simple. But the thing with shorting stocks, and again, another thing I've said many times, but you buy a $20 stock and it goes to zero, you lose 100% of your money. You short a stock and it goes from 20 to 40, you lose 100% of your money. If it goes to 45, you lose more than 100%. Now you owe them money. They're going to get a margin call and they say, you better get some money from somewhere else because you owe it to us. And so I don't play in that. You play in the options when you buy the put options. Again, the most you can lose 100% of your money, but you can't lose more than 100%. So that's by making a bearish bet. And let's face it, technically or theoretically, your upside or your downside, the money you can lose in a short position is infinity, because the stock can keep going up to infinity theoretically. But either way, as we all know, some people have absolutely lost their shirts shorting stocks. But you know, for some really sophisticated institutional investors, it can be a very profitable business. But for us, I just want to keep it simple, and that's what that's what we stick to. We do some straddles and strangles every once in a while, but other than that, is puts and calls, and even then, when I do the straddle, it's I explain it all out. It's like, this is the put I want to buy. I'm sorry, this is whatever. This is the put I'm going to buy. This is the call I'm going to buy, or call I'm going to buy, put I'm going to buy, and these are the prices I'm going to buy it at. It's not. And again, as you get through it, you're not into options. I really think that people should also think about, doing paper portfolios. In other words, hey, Matt put this one down. I'm going to write it down. I'm actually not going to put money in it, but I'm going to go ahead and do it, or put very small amounts of money. You can buy these options, and if the option trades for 80 cents, great. That's going to cost you $80, and it's like, well, I can afford to lose $80. I'm going to go ahead and because it's really you're going to lose money. That's how you learn. You learn from making money too, but having some real skin in the game is really how you get it going. But you can kind of do both. Have a very small amount of money in and pretend like you put in $10,000 in the trade on a paper portfolio. Write it down until you get more comfortable with it, and that can be very, very, very helpful way to get into it as well.
Right. No, that's interesting. And so you do all this stuff, and also you have. What about the session on Tuesday? What goes down there that you have?
It can be every Tuesday from 11:30 to about 12. Well, we tried to. I tried to do. When we started off doing a lot of educational stuff. We'll be talking about technical analysis, risk management, and stuff. The markets have been so volatile lately that we've gone right into what's going on in the marketplace. What I like, what I don't like, looking at the macro picture, fielding questions, people asking for specific things on specific charts. So I look at those. But again, it's a time for us to, people are asking questions all the time during the day, but here's one where I can kind of talk about why I'm doing that. Such an important thing for me is that even when I do trades, I don't just say, okay, I'm just going to buy some NVIDIA puts here, or I'm going to buy some QQQ calls here. Okay, why? And so I always put it, and usually I try to anyway, and I think I'm pretty successful at it, is tell you in advance, hey, this is what I'm seeing. This is what I'm probably going to do if we get the bump, 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 and then I go, okay, okay, I'm going to go ahead. This is where we're going to buy it, or this is where we're going to sell it. Hey, we own this. Like today, we had QQQ puts as the market was getting hammered, and SQQQ calls. Those are both bearish bets. And I was saying, okay, since we have some nice money and real nice profits in those QQQ puts, I'm going to sell those, but I'm going to hold on to the other ones because I think the market's going down next. It will go down further next week. But I don't want to leave them all on the table, as we said earlier. I don't want to leave them all on the table. Let's take some. And I also told people, because not everybody bought the QQQ puts, I said, okay, if you on those SQQQs, if you don't own any, if you haven't been able to take profits on anything else, take at least some. Hold on to others, but take at least some. Sometimes you only bought one option, and that's all you can do. You either just make one decision or not. In that case, I would have said, go ahead and take the profit because, but even if you have two options or three options, believe me, there are plenty of times when I buy very, very small numbers like that. You can, again, you can learn the game by just putting small amounts of money to work and build it up. So you build up the money, but also build up your confidence. And but if you can, try to buy more than one. There's plenty of times where I've only bought one, but if you can buy more than one, you do that because then it's like, hey, I've got a nice profit. Especially, let's say it goes up 100%. Okay, you sell half. You own two options, you sell half. You cannot lose money because it's doubled. You've now made 100% of your money. Now everything else you get. So even if it goes down, even if it goes down 50%, you're still going to make 50% on that half or 25%.
Right.
So, but the point is, we're just risk management, and we really try to play the game, and we using our heads.
Yeah, and the thing is, like, sometimes people ask me, like, hey, Rodrigo, like, for example, am I able to when am I going to make my money back on this, right? So, like, it's really hard for me to give him a straight answer because it's hard for me to tell. Like, for example, Raj made his money back. He joined Wednesday. So 2 days, but that not some people it's a week, a month, 3 months. So it's always so. But what I'm trying to say here, Matt, is that overall, right? The folks are doing good in the chat room. But when I get that type of question, it's really hard to give him a direct answer for that type of question, right? Because we don't know how volatile the market's going to be tomorrow or a month from now. But if there is volatility, you will be in there.
Right.
That's absolutely for sure.
And there are times, again, it hasn't happened too often lately, but there are times when people say, and I go, I would do nothing on this trade right now. The stock is not overbought, it's not oversold, it's fairly valued, it's not overvalued or undervalued. The stock's kind of doing nothing. It's in a tight trading range. There's no trade here right now. I mean, if you own it, great, hold on to it. If you want to own it buy it on a long-term basis, great. But if you want to trade it, I don't see anything. I'm not going to tell you to do something just to do something. Again, and I don't make any money. I make any money off your trades. It's not like I'm a broker. It's like, I want you to do a trade so you pay me a commission, and I don't get any of that. I mean, people do stock trades for free, but they do have to pay commission to do the options. Those options commissions are way lower than they used to be, way lower. So it's not expensive to trade those options at all. But I don't get anything. If I'm churning your account, it's not.
Yeah, and that's probably because maybe when people get into trading, they think they have to be trading every second of the day, and they force trades, and that's when they start over trading, or and one thing leads to another. And that's really the thing, right? Being like a sniper in these cases and that's the thing. Like, for example, if you're in the chat room, you don't have to be trying to measure technicals or things like that, because you already have that covered. When you're sending them when to buy or sell, it's because it's not a random time. Oh yeah, maybe let's sell. I feel like it. So you're looking at the chart and you're going through all this stuff. You've been doing this for 40 years. So some people ask me, how does Matt know this stuff? And it's like, look, since I've known Matt here for about a year and a half, he's called every single correction on time. And even better, he's told all of his members, and they can all tell you, hey, I expect a correction. Please, I think that we should try to go cash, and so that we can build some cash and get some good entries on some good positions for long-term trades or things like that. So that's really what I didn't think that would be possible when I started trading, but some people do this for 40 years, and you're going to be somebody else. I'll tell you that.
Yeah, I guess the biggest thing is there's so many things on Wall Street that don't make a whole lot of sense. And just like when I made that call on China, on the FXI China trade, it's like, what are you talking about? China is, you want us to buy call options? You think this thing's going to go up? And it was like, they've been cracking down every month. They're cracking down on a different industry. The SEC is going to delist all, Alibaba and all these other companies. Like, what are you talking about? And I was like, yeah, you're right on all those things, but it's so dramatically oversold that it's got to bounce. And not only that, is that the Chinese government doesn't want their stock market to crash. They're going to step in and do something. And sure enough, they did. And that's why we were able to, that was part of the reason why we were able to make so much money. And the same thing with Viacom. It was just a matter of time before they announced a secondary offering, because the stock was still, why be irresponsible for them not to sell some stock? People want to buy it. And the stock got clobbered. So there's correlations that don't make sense to a lot of people. And believe me, there are people on Wall Street who don't get it right, because they're talking about theories, and they're paid to be bullish. Too many people on Wall Street are paid to be bullish. I mean, if they're working at a money manager, they're paid to keep the people that are giving the money in. If they're working for a broker, they want people the money in their brokerage accounts. So it's just the it's what they do. And again, they're not snake oil salespeople. Over time, stocks do go up, and so for them to stay bullish is fine. That's right. But
Right.
if you want to be a active trader, you've got to be able to play both sides and look at what really happens, not what should happen.
Yeah, play both sides. And here's the thing. For example, again, look at Delia Espinoza on the Zoom chat. I made my money back in a few days with Matt Stock Alert on TMF ETF. Thank you, Matt, from Chicago, Delia. So this is what I'm trying to say, Matt. Like, I get these emails, I get these calls of people, hey, tell Matt thank you, and I made my money back at this, and it's like that. So I just think it's great, and we have a lot of members here, so you guys can feel it out for yourself. And if that's not enough, hey, 7-day money back guarantee, really give it a shot. But I think it's just great that you do this, Matt. You help out all the retail traders, especially because a lot of them that came in on 2020, they honestly came under the impression and expectation that stocks only go up. And we're in a time that, well, I mean, I'll let you take it from here. Let us know about these times.
Well, it's just, what happened, people mistook what the Fed was doing, and that the Fed always wants the stock market to go up. And the biggest mistake they made was in 2018 by, they just read the tea leaves wrong. They said, well, the market, they were tightening. And then when the stock market went down almost 20%, they finally stepped in and pivoted and changed their and it's like, actually, that's not what happened. The market was down 12% in the middle of December of 2018. And they came in and tightened again. And then the stock market really started getting hit. It was only when the high yield market started to freeze up, which was only 2 weeks later, that they said, oh my gosh, we gotta step in and support and change our policy. So they might do the same thing. They're almost certainly going to do the same thing again. But again, it's when the S&P is down 20% or maybe even more. The other thing that the people are saying, well, they've done it for a decade. Well, because we came out, people, and some of them are too young to know, but it was, and other people just don't understand that, not for any reason, because they're not in the financial business, is that how bad we were on the brink, and the financial system was on the brink in 2008. I mean, it could have collapsed, the whole global financial system. The Fed was able to get out of it. And the thing is, they had to keep the stock market buoyed for quite a few years after that, because if the stock market went down, the system would have gone with it. Okay, the same thing happened during the 2020 pandemic. Now, again, this wasn't because a bunch of greedy people on Wall Street put too much leverage in the housing market like it did for the Great Recession. This time it was just, obviously a global pandemic. It wasn't anybody's fault. Certainly wasn't anybody on Wall Street's fault. So the Fed had to come in because the global economy was freezing up. People weren't going out, was freezing up. They had to do something to support the economy. So they did the right thing. They didn't make a policy mistake then. They sure as heck didn't. And they're not making one now, actually, even though it's going to be painful. Their mistake was when they kept the liquidity in there too long. But my point is that what the Fed did each of those times was only when we were on the brink of a serious breakdowns. We're not at that right now. They're okay to let the stock market, these markets see some volatility. They're okay for people to see. They have to fight inflation. Okay, back in 2000 and back in the 1970s when Paul Volcker came in, he had this inflation. He came in and he came in and said, okay, we're really going to crack down, and everybody hated him for it until later he became like the known as the greatest Fed chairman of all time. But my point is, going back, is that in the last 10 or 12 years, they had to, because the system was way too fragile. The system is no longer that fragile anymore. So they can let this stuff play out, and they can let some of the froth get out of the marketplace, and they can fight inflation, even if it's going to knock down the stock market. I mean, back in 2018, they didn't worry about pivoting. It was no big deal. There was no inflation. It was less than 2% inflation. We pivot, throw all sorts of money back into the system. We don't have to worry about inflation. Right now, if they know they're going to slow the economy. They know the odds of recession are way more than 50-50. I'm telling you, if Goldman Sachs is saying that it's 35% chance we have, which they are saying, 35% chance we have a recession, they think it's 85. No economist on Wall Street will ever say more than 50%, ever. Well, I'll say ever, almost never. Because it's not good for job security to say that, because especially if you're wrong, you're screwed. Okay, so they only tell you after we're already in a recession. Then they say, oh yeah, we're probably going to be in a recession, and then a couple months later, they say, oh yeah, we're in a recession, even though we're almost out of the recession. So you see what I'm saying? The situation is the Fed is not there the way it had been, because they don't have to be there. The system isn't as fragile, even though they don't care if the economy slows. In 2012 and 2015, they did have to care if the economy slowed a lot, because the system was too fragile to handle a slow economy. Now we can. They're going to let it. They're going to let it happen, in my opinion.
So, I guess everybody's dealing with the aftermath of everything that we had to do during COVID relief and all that stuff. And I remember that, like, I think it was, when in Europe they had that debt crisis, they had too much debt. And, do you think that, I mean, especially, let's just say, right, I'm just trying to think of like things that could happen where, let's say Russia defaults on their debt or not, but, you have all these countries in Europe that have a lot of debt, and, could we have another Greece situation here with this, right?
Well, I'll tell you, it's funny, because one of the things you have to remember, the European Union did not bail out Greece. Well, they did, but they really didn't. They did bail out Greece, but the only reason why they bailed out Greece is because they were bailing out the European banks, because European banks were loaded to the gills with Greek debt. And if Greece was allowed to default, those banks would have been in big, big trouble. So they were, Greece was too big to fail. Believe it or not, little Greece, that little economy, was too big to fail because they owed too much money. And there's the old saying that they say about Donald Trump or other very rich people. They say, some little guy owes a bank $10,000, and they default on their debt, and default on their loan, or let's say it's a car loan, and they just come and take the car. And it's like, so they lost $10,000. They're going to lose $10,000. They'll take the car, they'll sell it. They'll sell it for $5,000. They'll lose $5,000. Okay, so they lost $5,000. They lose money every day, but they make a lot more money than they lose. I think it's great. If you own billions of dollars or hundreds of millions of dollars, they'll just renegotiate so that you can pay it. When they get so big that they become too big to fail, for most people they're not, but for great, big, huge billionaires, they do become too big to fail, and that's what happened in Europe. So these are the types of, I'm going to go here. I'm going to show you what's going on right now, which may happen this weekend, that I've been talking about the last couple of days on the chat room. We've actually made a bet on it too. But here is the Japanese currency, okay? The Japanese yen. Look how oversold it how much it came down. Look at it. It bounced back today. Now, yesterday I was in there saying, I'm going to show you one other thing in a second. Because the ETF, excuse me while I scratch my back. Well, the ETF, look at that weekly ETF. Look how incredibly oversold the yen is. And I said, I think the dollar is going stronger. The yen is going to probably go lower over time. Euro probably lower over time. Dollar's going higher. But it's too oversold, and the yen is too oversold, and the euro is too oversold. There's only 6 currencies in the DXY dollar index. The euro is the biggest. I'll show you the euro here. Euro currency, currency. Same thing. It's not as oversold, but it's definitely oversold. See that there on that RSI chart? Bang. See how it's getting oversold? Not as oversold as the yen, but still very oversold. And the dollar, DXY. See how overbought this thing is getting. Look at that. Again, until today, way, way overbought. And that's its daily RSI on its weekly. Oops. Weekly RSI, relative strength index. See how overbought it's got. Okay, and so it's coming down. We made a bet in the UUP options. And not a big bet because it's not the most liquid thing in the world. But again, this is where we look outside of just the US stock market. We're looking at other areas of the currency markets, the commodities markets,
wherever there's volatility. I mean,
exactly,
just like you found FXI, because I know
exactly.
a lot of people were extremely and still are extremely hesitant to touch anything, from there.
And the thing is, outside of this, who would do that 10 years ago or 15 years ago or 20 years? It's like, I'm going to do something on China style. Well, now we have ETFs. They're traded in the U.S. They trade on the U.S. exchanges. You don't have to do a currency thing to trade along with your trade. You just do it. Okay. Same thing here with the dollar trade. You don't have to go. You don't have to call up the futures pits for the currency futures pits. You have an equity, an ETF on the dollar index that you can buy it. And again, it's just trades in U.S. dollars. It trades like any other stock. Settles it like any other stock. You can, again, we have the tools to be able to do this without having to make esoteric trades and be overly sophisticated. There's the Wall Street. Wall Street still, you get a lot of bashing, and I've done a little bit of bashing for Wall Street. That's where I come from. But there's done a lot of great things. And the thing is, the tool, like I said, the tools are there. A lot of people are afraid to use them, and it's, again, I'm not going to start throwing you into, these condor crazy swap things, credit, big buy rights and things. Buy rights are actually a very good strategy. And if that is what you do, and you're a sophisticated investor and you want to do that, that's great. That's just kind of not what we do in here. And my thing is, my expertise is has been in trading, finding bottoms and tops and stocks, short term, intermediate term, and long term. I was not an options trader, otherwise obviously trade options all the time. So I stick to my knitting, and even though I do understand buy rights and things like that, those are great strategies. I just think that it's for a different audience than I'm dealing with right now, and the different audience that I'm not going to go off into that. It's like, geez, maybe I do another chat room, and no, I'm not going to do that. I'm just do one chat room, stick with what that works well for me, and that's what we do. And so when I go into a Chinese stock, it's not like we're going to some obscure stock that we got to find a broker in Hong Kong who can do the trade for it. No, we're just doing a big cap thing, very liquid. We can get in it, we can get out of it very easily. It trades here in the New York Stock Exchange or in the U.S. over-the-counter market. And
and that's the thing, right? You are looking for volatility, right? A lot of people, they see volatility, it's like, oh my God, I'm just going to wait until everything is perfect. And, we're back in everything goes up forever mode. But we could be in this situation for years to come. You don't know.
Yeah, I mean, it's and the thing is too, that's where the money is. I mean, I don't want to, I understand. One of the things that I made a call, and it was a long-term call on the energy sector. And this is before I was doing this chat room, but I was doing the stock picks report. And back in October of 2020, and I was pounding the table on the energy stocks. And people are telling me, are you out of your mind? Nobody wants fossil fuels anymore. And I was like, fundamentally, I'm like, I don't want them either, but we can't get away from them. We cannot live without them. We cannot move to a clean energy in the next decade. It's just, most people say it will take more than 2 decades, but I know in the next decade we're not going to be able to. These stocks are oversold. They're under, and they're on the fundamental side. I knew that the spending, capital spending on energy was just way too low, so there was not going to be enough supply. It's a fundamentally a good call. Technically, it was a good call because it had gotten really oversold on the charts. It was incredibly bearish. The sentiment was incredibly bearish, and the shorts were really huge. I was pounding the table, and the XLE, had this huge run since then. The big guys on Wall Street, some of them turned bullish in January, 4 months later, okay? And that's great. At the end of the year, they said, look how smart we are. We were up 50%. No options involved. There's the XLE and the XOP, which are the energy ETFs, they're up like 50%. That's great, but I was up over 100% on the XLE and 115% on the XOP, okay? No options involved there. But you see the difference? If you wait until you're sure, because that's what they're not, again, that's okay. There's nothing wrong with what they're doing. But they wait until they get absolute confirmation, and then they jump in. They're looking for that 70% in the middle. The thing is, Warren Buffett became a billionaire by getting in at or near the bottom. He doesn't get the exact bottom, and he is a timer, okay? And with the blood in the streets, he's just a very long-term market timer. And there's a reason he has historic levels of cash right now, because the market's expensive. If this market, and I think will last the rest of the year, and when it finally does see a bottom, you'll see him picking it. He'll buy some unbelievable opportunities he'll get. I mean, back in 2008, or it might have been early 2009, but in 2008, he got convertible preferred stock from Goldman Sachs. Unbelievable. I mean, so he made a huge gain on the preferred stock, and he also got paid a 10% dividend every year. 10% from Goldman Sachs. Oh, what a great company. I mean, it's like there's no way that was going out of business. But he was willing to help them when they needed it, when there was blood in the streets, and everybody else was panicking. And as I said, and it's a wonderful life. Everybody else was panicking. We kept our heads, and that's how we survived. And, well, in some cases, that's how you get rich. And I say rich. I don't want to start promising that people can get rich or quit their jobs. What I am saying is that in the trading business, if you look beyond the fundamentals, you can really get some great opportunities, and do so without just guessing. You can do so with using educated decisions rather than just wild guesses. And they don't all work, but you can make some good ones and really get some. I mean, Kathy Wood. I just see a headline here: Kathy Wood flagship down for 46%. She's a bright gal, but a bright person, and a very good. I mean, I think she'll make a good comeback at some point, but. She's kind of missing the impact that the Fed's liquidity had on the way up, so she doesn't realize that her stocks would have come down as much as they have, and probably going to fall further before she sees her day in the sun again. But I have a lot of respect for her, and she's doing real well. She'll do real well again. But that's what. And again, I don't pretend to be a genius. I just seen this thing before. I've been doing this 40 years. I saw the '87 crash. I saw the S&L crisis, the early 90s. I saw the .com. I saw the great financial crisis. I've been through it many times, and I see when people are just looking too narrowly. And I think this is one of these times. And I've been saying this all year long. And the markets come down. The bulls have been fighting me, and I've had some people on the chart come into me in the chat room say, "Hey, geez, man, thanks for sticking by your guns." Because, and again, like I said, I've seen it before. They were like, what are you, crazy? The market's, the bottom's in. What do you? And I was like, it's not. Well, I turned out to be right. I don't pretend to be right all the time, but I'm here to help. I don't make any money if you don't make any money, okay? And the times that people lost money last week, lost some money. I said, yep, I lost money too. Because you get all my trades, okay? I have a long-term portfolio, and that's just that's there to trade. I may purchase here if when I make those trades. I certainly announce those too. But the thing is, I don't make a trade and don't tell anybody. I don't make a trade and say, hey, let's I'm going to wait and see if it goes up a little bit, and then hope it runs up, and then tell everybody I'm doing that trade so I can sell it. No, that's what some chat rooms do. I don't do that. If I make a trade, you hear about it immediately. If I make okay, good. Oops, sorry, I just thought I got here it is. Okay, good. So, so I don't I'm sorry. I just, it's Friday. My 31st wedding anniversary was this week. And I just want to make sure I wasn't in trouble at home. Okay. As my wife says, I love you. I married you for better, for worse, but not for lunch. But the Friday night dinner, I promised I'd make her a nice dinner tonight. So anyway, believe me, we got plenty of time. So again, it's going back to what I'm saying though, in a very serious way, is that if I'm trading something, you know about it. You know about it when I trade it. I said before I trade it. Okay, I go in and say I'm going to buy this and I'm going to sell this, and you know about it, and then I go ahead and do it. And I don't. Once in a while, I shouldn't say that. Once in a while, there'll be something, and again, you'll understand why. It's like I bought this, I wrote it. It's now basically worthless. Okay. And so I don't tell you when I sell it because I just let it expire worthless. Or I might sell it for pennies, but I don't. So, and you go, well, why the hell would you do that? And it's like, well, sometimes something gets so low. Okay. Let's say you put in $300 into something. Now it's worth $30. Okay. And the expiration's in 2 days. It's like, what? I've already lost a lot. I'm mad about this, but I've made a lot more money than I've lost. I'm going to have losers, but I might as well hold on to it because I'm really going to be mad if I sell it for $30 and then it jumps back up in a major way in the next 2 days, which can happen in these volatile markets. So I just want full clarity, full exposure. Sometimes I don't tell you if I just let it expire, or if I sell for something that is for literally pennies. I usually try to put that in there too. But the point is, if I'm selling something for a gain, I'm selling something for a loss, I say, hey, time to take losses. Let's cut our losses, get out, move on. Hey, we're gonna make a nice profit. Let's move on. Hey, let's sell half of it here. I'm selling 20% of what I own here. I'm selling, and I'm going to sell another 20%. Or I would say, hey, I'm selling 100% right now, getting out. I'm very open about this, and it works really, really well. And the other thing I want to talk about too, I'm getting worked up here because the markets are just so much going on, and there's so much out there for us to make money. But the thing is, there are people on this site that help each other, and we're talking all the time. And as I always say, there's no such thing as a stupid question. Okay, number one. So if you're new, don't worry about it. And if you're experienced, don't be embarrassed. I mean, geez, I should know the answer to this question. Ask it anyway. Don't be embarrassed. Nobody cares. We just want to help help each other. But you wouldn't believe the idea is, I'll be like, holy cow, I didn't even see that. Thanks a lot. Yeah, let's buy this. Or somebody will say something like, I don't really like this, but 5 other people say they like it, and they go ahead and trade it, and they make some good money. They give each other stop levels. If you're really new to the business, what's a stop level? It means it's like, hey, I've got a level where I don't want to lose anything more than this. Okay, so you buy something at $10. Let's say a regular stock. I don't want to lose more than 10%. So if it gets to $9, I'm going to sell it. Boom, out. Okay. But if the stock starts to rally, it gets to $15, you raise that stop. So because you want to guarantee a profit, right? And that's a good risk management type of thing. But of course, if a stock sees a real big run, then you give it a little bit more room, et cetera. But again, these are the things we talk about in the chat room, and people are talking about this stuff all day long, every day. We try to do with people. There's some day traders in there, the swing traders. I really want to focus more on some swing trades because I think next week we're going to see some real good opportunity for both swing trades and short-term trades, short-term options. And, so if you go in there, geez, I'm really not comfortable. The market's really getting washed out, but I'm not comfortable buying options. And also the VIX has gotten really high, so I don't know if I want to trade that. That's okay. So what you do is you go in and buy the TQQQ, because I'm telling you, when this market bounces, and it's going to bounce like 5% in 2 days, and the TQQQ or the S&P 3 times ETF, you're not going to make 5%. You're going to make 15% because it's a leveraged ETF. You won't have to worry about being in those options that can expire worthless in just a few days. You can get into that will keep trading, and you'll always risk losing some money, but you won't risk as much. And I think whether it be next week or the week after, there's a good chance we get one of those lows coming real soon, and you'll be able to take advantage of it. And you'll get opinions more than just my opinions. People throwing stuff in all the time. And it's very, and it's good people. I mean, once in a while somebody say, what are you, crazy? But nobody's like, you're a jerk, you're an idiot. You know, nothing like that's going on. And we shut it down if anybody. We would shut it down if anybody did. It's just people give. I want an honest opinion, and people want an honest opinion. Hey, you think I'm crazy? Let me know. I want to know that. I might do the trade anyway, but I want to know that. And we're very civil, and believe me, I'm not going to take. And the people in the chat room are not going to stand for it if things start to get.
Yeah, no. Since we started this last year, it's just been great to look at the people, the progress, and all that stuff. But Thomas says that it's. I mean, that's 100% correct. Benzinga is solid and unbiased, and you know that's pretty rare nowadays. You know, we do have to say that. Shout out here. Well, thank you, Thomas, but shout out here to Barry. Barry just joined here, so welcome to the family. Let's give him a shout out.
Thanks for joining, Barry. Welcome to it. And I think first thing Monday morning we could be doing. So again, I don't want to. Again, we might walk in Monday and everything's kind of boring. The chances of that are really low, but we could have a boring, a quiet day on Monday. But boy, I think there's going to be a good chance that we'll have some things out there. If we're not doing the trades before early on Monday morning, we'll be setting up for trades and throwing out ideas. Hey, look for this one, look for that one, and especially in the energy area, I think there's some great opportunities out there. And there's a stock. I mean, I really worry that Peloton is not saying they're going to go out of business, but they're going to have a tough time for a long time. But boy, we're going to make money on the upside of this stock on a short-term basis at some point in the next couple of weeks.
And a lot of people are asking, like, where are these trades? So, like, I mean, those trades are all posted in the Inner Circle chat room, the live trading room with Matt. He's actually giving you guys clear entries, exits, timestamps. Transparency is like number one with these things, especially because, look, I'll tell you from my personal experience as a trader, I went through all these pump and dump chat rooms and all these, fake accounts and bots. And really, that's kind of why we emphasize really hard on making sure that you have a good experience here, because as a trader, I know there's some other stuff out there, and really that's why we do things differently here. So the fact that you get entries, exits, you have that meeting on Tuesday, Matt's there Monday to Friday, 9 to 5. And on top of that, you could talk about not just options, but longer term stocks or swings, even crypto. That just kind of opens the door to like a huge playground of learning and also trading. But well, with everything that we're talking about here, Matt, right? Just want to pick your brain here for a little bit. Have you been looking into the supply chain lockdowns in China, and where do you think that's going to go?
Well, I mean, the thing that concerns me so much about this whole issue of supply chain and inflation overall is not just China. It has to do with this war in Ukraine. Long before anybody thought that, or seriously thought that Russia might invade Ukraine, and the Fed was saying, "Hey, we've got problems with inflation. We're going to fight it. We're going to raise interest rates. We're going to end quantitative easing." And all of a sudden, we get this thing in Europe, and it's like, well, it's going to be over in a couple of weeks. They're going to go in, and take over the country in a week. Certainly, Russia thought that, and now it's completely changed. In the last couple of weeks, I mean, I spent a lot of time listening to geopolitical experts, military experts, and they're all basically saying that the strategy now from Russia is that they're in a war of attrition. If they're in a war of attrition, that's going to take a long time, okay? That means all that Russian oil and natural gas is not coming out anytime soon. If it's not coming out certainly not coming by next winter, okay? And if it's not next winter, it's going to be a real problem, because Europe cannot survive without that natural gas. It just can't. I mean, the emergency level things that they can pull out, but you have to remember, if they can get that natural gas, if they can do those LNG platforms and put them there, offshore, that doesn't matter. They still have to take the natural gas from somebody else. So in other words, there will still be a major, Europe might have it, but they'll take it from Asia or they'll take it from the US. In other words, the supply is going to be way down, the prices are going to be higher. Oil prices are going to be higher. It doesn't matter that they can find other sources because there's only a finite amount of it, because we have underinvested in these areas. We cannot produce it enough. Okay, same thing with food. Ukraine's the breadbasket of the Ukraine. Yeah, they're starting to plant some, maybe they can do something, but there's going to be a shortage of food. Okay, and then finally, the supply chain issue that Rodrigo talked about. This, everybody was saying this time last year, it'll only last till the end of the year. Then by summer, early fall, like, oh, no, we definitely know it's going to go into early next year. But, by the end of first half, we'll be out of it. Well, now we know, I mean, we learned a long time ago, it wasn't going to be that. And now with the way that Russia is engaged in this war of attrition, it's going to be here with a long time. So this inflation issue is not going away. So the supply chain, and of course, what's going on in China with their locking down their economy because of COVID, but it's a number of different things. It's not just China. I still think it's everybody was focused on Russia for a while there in Ukraine. They've kind of taken away, and probably because there's not much killing going on. Thank goodness. I mean, that's great on a humanitarian side, but the fact that it's become a war of attrition is not good on a financial side, because they're not taking those sanctions aren't disappearing as long as Putin's there or as long as the war is going on. Okay, even if they do a ceasefire, they're going to keep the sanctions on. Okay, they've said he's a war criminal. Right? These sanctions are going to be there. That means that oil's not coming, natural gas is coming. Food might be a little bit easier, but they planted the food they can plant. I mean, you get into June, you can't start planting food. It's not going to be the harvest in time. So
Right.
forget that. Okay, so we have all these issues that are coming together that are going to create problems, but create volatility. And again, I don't want to call for the end of the world, because that's not what I'm calling for. And I do think there is a Fed put. I just think it's at a lower level than it used to be. But it's the kind of situation that is great for traders. And the old buy and hold players that have done well in other years, like for instance, for most of last year, that worked great last year. That's not working well this year. It's a trader's paradise.
Right. So how does this apply? For example, I know that you were talking about, there was this company that we were talking about that does like some sort of dry bulk for fertilizers or something like that. How does this impact a company like that, like CTRM? How would it
Well,
impact?
CTRM, I mean, these guys, again, let me just pull it up we'll just look. I always like to look at the stock while I'm talking about it, even if I'm not talking about the technicals. But, these guys, there's so many lines here. I want to take the lines off so you don't looking at 8 million different things. I'll just leave the 200-day moving average up there. Oh, no, I'm sorry. I'm going to leave the 50-day. Hold on. The yellow line here is the 50-day moving average. Okay, good. Now, what these guys do is they basically, it's almost like a rental car. I mean, they rent boats and they rent cargo ships, and there's different kinds. They have some that they bring in and they provide all the things, but they have other ones that they just come in and they just get, here's the boat, like with a rental car. Here's the boat. You provide the crew. You provide all the you get the gas. You get all the supplies to feed the crew and work on that's fine. Other ones, what they have is what they call that. I always say they charter all these boats, because all these companies they only have so many cargo ships. Okay, and so they use companies like this for that extra cargo. Well, guess what? All right, even though people are worried about the slowdown in the economy, okay. It's because it was inflation. Hard assets are going to do well. These guys, they ship coal, they ship iron ore, all this stuff that there is high demand for. Okay, even if the economy slows down a little bit, still going to be high demand for this. So the fundamental thing for these companies, the fundamental picture backdrop is very good. And they bought a bunch of more ships at the right time. Sometimes it's like, oh, they're buying ships right at the top. No, we're at the beginning of what I think is a secular bull market for commodities, and you got to ship them somehow. And these companies are more these commodity companies, and these companies that are the end users are they don't want to buy that many ships because they like to play. So this is a really good play. Now on the technical side, we talked about this the other day. The stock went up 16%. So earlier today, somebody asked me about it on the call, and I said it went 16% in just 3 days. Let's hold off on this one. You don't want to get aggressive on that. And sure enough, it did come down a little bit. I mean, the market affected everything today. But see this 50-day moving average? See how it's bounced off that? It broke above it. That's nicely. It bounced off it there, bounced off it there, bounced off it there. It's been holding it the last couple of days. So this is great. For a swing trader, this is the trade. You sit there and you say, okay, where's the 50-day moving average? Hold on a second. Sorry, I took it away. There it is. 50 days. We're getting close to $1.82. Okay, but you see, it was only 5 cents away, but 5 cents away on a $1 stock or $2 stock is a percentage, is a decent percent. And like I said, I'm not going to worry about it if it breaks it slightly. See how it broke it slightly there? Okay, and it broke it slightly there a couple of days ago. It would have to get below 175 or so for me really to get overly worried about it. But then you say, okay, good, I'm out of my stock. I'll take it. I'll take a little loss and move on. And that mean I'm done with it. I'm gonna go back into it. I'll look for another entry point is my point. And what happens here is the stock starts to rally and breaks above these highs from this morning, then you're going to add to the stock. And again, it goes down to this trading philosophy. And I like to talk about this in every one of my talks, is that people all too often make the mistake of buying. They really like something, so they buy more as it goes down. And that's okay. You want to scale in a little bit. That's okay. But if it falls a lot, that's not what you want to do. Okay. You want to get out. You want to cut your losses. When on a straight stock trade that does not deal with options, you go down more than 10%, get out of the stock. Get out. To never lose more than 10%. Do not add. Do not average down. You can average down a little bit and try to do not average down. And then other people, what they do is they're not willing to pay up. It's like, oh, geez, I wish I bought more. Go ahead and buy more, because then you buy a stock at 10 and you buy more at 15. Your average price is 12. It's trading at 15. You're making money. You're just adding to a winning position. You don't want to add to a losing position, because then you're just praying that it goes back up and comes to even. Get out, cut your losses, add to the winners, because I'm telling you, if this one is as good as I think it's going to be, you're going to buy it at $2. You're going to buy it at $2.50. You can buy it, and then suddenly it's at $4, and you got a lot of the stock with an average price of $2.75, and then you say, well, I'm going to put a stop at $3 to guarantee that I don't lose money, and then I'm just going to let it run, and it could run, run till the daddy takes the T-bird away. This could be a big winner.
So this would fall under what? I mean, the way that I'm looking at it, man, it's like there's a new economy, Matt, right? Because of what's happening. And it doesn't look like it's going to stop. It doesn't look like either side is going to back down.
Right.
It doesn't look like either side is going to concede anything from any side. So we can just kind of assume that this is going to be the new normal in this case. If such, you would put this one, because you can see, I guess, like, that reversal it had. And I know that you do a lot of technical sessions with the guys on the Tuesday sometimes, right? Where you could be like,
right.
Okay, here you can see a clear reversal or something like that. You teach them about the indicators like you just did in a quick little session now, right?
Exactly. And let me just see here. Whoops. And we talk about things, like the MACD chart. This one I broke down, so that's okay. That's okay, because it held the 50-day moving average. This is a bad chart for the MACD. It's not. It's such a low price stock. But we look at what's called a MACD chart. I'm going to look. Let's look at. Let's look at very simply the S&P 500. And what a MACD. Remember we talked about, and I'm sure you've all a lot have heard about golden crosses and death crosses. It's when the 50-day moving average crosses above the 200-day. That's golden cross. If it crosses below the 200-day moving average, it's a death cross, and it's negative. It shows a change in momentum. Well, the MACD chart, what that does is that tells you more shorter-term momentum. Instead of using the 50-day and 200-day, it uses the 9-day and 12-day. Well, sure enough, when the again, I got too many lines here, so let me get rid of some of them so you can see them a little bit better. It gets too messy and you can't really understand. Okay, but here, when we made that negative cross right here, that showed you that that this thing had really lost a lot of momentum. It showed us the same thing. At the beginning of the year, I was saying we got to get short the market. We got a negative cross here on the MACD chart. There was other things too. Okay, here this was a little head fake, so we didn't get too aggressive here. Same thing here but then we got a positive one. Okay, and we made some money there. I should have been more aggressive than I was. I didn't think this rally would last as long as I thought it would. But again, when this thing happened, I was like, come on, this is a great indicator. Another thing that I look is what's called a Bollinger Band chart. And again, I don't want to. I don't get too much into. I definitely use a couple of things. Relative strength index. I didn't talk about stochastics. We look at stochastics. We look at Bollinger Band charts, and that's again a short-term indicator. When you look at the 20-day moving average and 20-day, not 200-day, and whenever you get more than 2 standard deviations away from that, if it's two standard deviations above it, it's very overbought. Below it, very oversold, and usually tells you that it's a good entry point or exit point, depending on if it's overbought or oversold. And that's another one. I'll show you here on crude oil, which I had a great call and got the $130. Like I said, I was wildly bullish on crude oil, right? We talked all about that. I was wildly bullish, pounding the table a year and a half ago. But this is what's called the Bollinger Bands chart. Let me just get down this here. So You can see it a little bit better. And I'll get rid of the volume chart because you don't care about that. And let's see. This is 2 standard deviations above its 20. Look how incredibly far it got above that. I was like, as much as I love crude oil longer term, as much as I love the energy stocks, we got to take profits and we got to make some negative bets. This is, again, another thing that I look at. And when it gets extreme, it gives you a good, nothing's perfect. If it was perfect, we'd all be worth, $1 gazillion and we, retire. I mean, I'll do this till I die, but we just try to use all these different things. I don't get too much into it. Some of the technicians get so involved, and I think they make it more confusing. Sometimes some of them just do it because they want to sound smart, throw out these terms that nobody knows, so they sound smart. But technical analysis is very easy. But they all use it. All the best traders use it. Every single one of them. I'm telling you. And so I like to use it too. But I do try to keep it to a level that the people can understand. And not to say everybody can understand it. Believe me, we take the time. Everybody can understand it. But it does take a lot of time to get all of it in. I've done that for 40 years. For you guys, I try to keep it in something that is easy to understand and not something that, because if you get too many things, too many signals, you're too afraid to do anything. Well, yeah, this is positive, but this is negative, but it's like, let's keep it to a few number of things that have worked well for me for 40 years, and stick to our knitting and use those. But this was again, it was so obvious. And again, people were saying, "Wait a minute, Matt, you're wildly bullish on oil," and and I'm like, "Yeah, but look at this. You can't. There's nobody left to buy. Bullish. Everybody, the bullish sentiment had gone through the roof. The futures traders were loaded to the gills in oils. It was one of the easiest calls ever made." And of course it came down in a big way. So it stayed. But again, I even said, don't sell all your oil stocks, sell a portion of and for long-term holdings, don't touch those. Just leave them in there. In short-term positions, sell a little bit of them, maybe buy some puts. And but believe me, I said this thing ain't going back below $90. And if it does that, no way it drops below 80. And sure enough, it came back and settled in. This is interesting because it's starting to form what I call it, not what I call, but what is called a descending triangle pattern. Descending triangle doesn't mean it's going to be negative. It looks like it's actually trying to break to the upside. So we'll see. But my point is that we like to use a lot of different aspects in the market to keep to keep people the best choice and make it, like I said, a not just because some clown on the chat room said, I hear this stock's they're going to squeeze the shorts in this stock. That's just a guess. I mean, maybe there are people who, that's the thing, is there's some guy at a hedge fund who's maybe he is about to do that. I don't know, but we're trying to make decisions based on several different fundamental, technical, sentiment, other things, factors, and do it instead of just making a wild guess and licking your finger and sticking it in the air. That can work every once in a while, and it's the worst time, because the worst ones to work because they don't work very often, and you bet a lot of money on it and you lose. So that's really I hope that gives you an idea of what we're what we try to do in the chat room, and trying to help people make as much money as possible. I'm sorry, my thing is fully charged, and I just want to unplug it there. Anyway, so I don't know, Rodrigo, you want to go into the Q&A and some and maybe some individual stocks that people might be interested in talking about. I'd like to do that.
Yeah.
It's it'd be good because I know there's some stocks, I'm sure, and we can talk about the general market a little bit further too, because I know with the market making a new low today.
Yeah, so let us know what's on. Let's just give us a little bit of what's on Matt Maley's mind. Let's hear about from you a little bit.
Okay, well, first of all, I again, this whole situation where what's going on in Russia, the people have kind of lost focus on, is a big deal. It means the Fed is going to be continue to cut rates. I'm sorry. Cut rates, raise rates. That almost certainly go 50 basis points. I don't think, even if the market's down, I don't think Powell is going to be dovish. Doesn't matter. If this market, after today's sell, if this market sells off a little bit further next week, there's a good chance we get a big rally. I think the S&P is going to 3,800 before it bottoms. That may not happen until the fall. It may even fall further than that, a little bit further than that, but I don't think that, get 3,600 maybe. But the point is that, remember the last time when the Fed first raised rates, they put 50 basis points on the table. They only did 25. The stock market sold off into the meeting and then rallied. Okay. Now we're seeing a bigger sell-off, and especially if we get it next week, there's going to be too many shorts, too many bears. There's going to be some forced selling probably because of margin calls, and then we're going to get a washout move. So, and this would be perfect for what the Fed wants to do. I'm not saying that they can produce this, but what they would love to have that and say, we raised 50 basis points, even though we put 75 basis points on the table. It's only barely on the table, where the 50 basis point one the last time was firmly on the table. But hey, we're going to do 50 basis points and we're going to be tough, and yet the market still rallies. That would be the best thing for the Fed to happen for the Fed. So they would love to see the market get washed out early next week. That doesn't necessarily mean it's going to happen at all. But if it does, it means we're going to get a very tradable rally. And I've wrote down these the other day. I mean, Netflix, I'm worried about Netflix, but I'm not worried about them. If this market sees a big pop, Netflix is going to fly. Okay, but and really good companies like Advanced Micro Devices. Remember, I said this stock's going to be in big trouble. People were telling me the stock was about 125, and I said it was going to go below 100. They thought I was nuts. Well, it did. And went well below, went at 14% below. But it's a great company with great prospects. This is one we're going to be looking to buy calls on if we get a washed out market. Netflix is another one. It's weekly. I'm getting all excited, getting all worked up now. Hold on here. Let's look at the weekly RSI chart, relative strength index. Let's look at this. Now, see how oversold it is here? Well, look at its weekly. Let's pull up its weekly chart. Bang. Bang. Look at this. Look at 19. Okay. We'll go back here. Okay. So we'll go all the way back. It's by far the most oversold it has ever been. Look at this. It's just Netflix is not going out of business. I mean, there's no scandal here. There's no accounting scandal. There's no sex scandal. They're just, people throwing the towel. This thing is washed out. Gosh, I'm going to write this down. We should even think about buying this one. Well, buying the stock on Monday, even if the market's fallen, by dipping our toes and then buying a little bit later. But look at this. This is just incredibly oversold. Let's look at the Bollinger Bands chart. I'm going to add that in there if I can. Bollinger Bands, bang, bang. Let me get rid of these moving averages so we don't have, okay, so it's not too messy, let's say too busy. The chart doesn't get too busy. And just give me one more second. I'm sorry, I'm just kind of rambling here, but we got some good, oops. I'll leave the RSI chart, but you can see how oversold it is. And look at the Bollinger Bands below 2 standard deviations, okay? It's not way, remember the one for oil was way above it. Well, it's not way below it, but it's below it. And it's never gotten way below it. Look when it got down here, rally. Look what it got down here. Bam, big rally. Down here, rally. And that doesn't look like much, but it's actually like a 20% move in just a week. This stock's getting ripe for a big bounce. We're going to be looking, buying the stock on Monday, and if it stays down to the Fed meeting, we're going to be buying call options of this stock. Bank of America, JP Morgan. Let's say JP Morgan.
Yeah, and for those that are asking, Matt, even though Matt's going over these stocks, he will be following up with the actual details of the setups of the trades in the chat room in that channel where he's posting the trades and setups for the members that are here that are going to want to follow up. Yeah,
exactly. And then we have, I'll just put up one more here, and then I'll get to some of the stocks that what happened here? Oh, good. I thought my machine had frozen up on me. Hold on. That happens every once in a while when not on my big screens that I use for work, but on my laptop here. Hold on. Now I'm using RSI. There's a lot of other. It's not the only thing I'm looking at. It is the one I always go to first, just out of habit. But it's a good indicator. But it's like any indicator, it's not the be all and end all. But now again, to say, oh well, it's not crazy oversold. Well, JP Morgan is JP Morgan. It's never going to get crazy oversold. Well, I should say, well, at least not since the now the only time it's been more oversold was during when the pandemic and everything got really oversold because nobody knew what the hell was going to happen next. But other than that, this is about as oversold as it gets. So here's the one that we're also going to get. It's below its 200-week moving average. But I think maybe it's going to go lower later this year, but it's getting ripe for a near-term bounce. So you don't need to buy really speculative stocks here, because believe me, some of these speculative stocks are really going to bounce. Some of them are not, because people are going to say, that was a piece of crap anyway. I never should have bought it. And you're going to be able to buy some call options in JP Morgan, Bank America. JP Morgan, Jamie Dimon, he's probably the most powerful, maybe the most powerful man in the world, certainly the most powerful businessman in the world. Here's another company, incredibly well managed. Excuse me, again, oversold. Maybe not quite as over. I think it's quite as oversold as JP Morgan, but oversold. That's another great one. Devon Energy. Some of these, Chevron, which Exxon report. It'd be interesting to happen with Exxon. They just they announced disappointing earnings, but more of a buyback. But we have a slew of stocks that we're going to be looking at next week. If we get that big washout move, and even if we don't, even if we just see other reasons to think a bottom has been put in. So I guess my point is, even though I'm bearish, and even though I'm bearish over in general for the rest of this year, the next big, and I think we're going to make some money on the negative side over the next few days. The next big move is going to be getting bullish on some of these names when we get a washout, and that's where we're going to make a lot of money.
Right.
Anyway.
Yeah, and you always have that, continuous updated checklist. I'm sorry, watch list that
Right.
you have in the chat room. Yeah.
Right, and like I said, and I'll put those things in there and say, hey, I said today I came out and said U.S. Steel. I said it's too early yet. The stock tried to rally and it didn't make it. You can see right here. Look how much it rallied and then it went back down. That's actually a really negative chart because it's what's called an outside day. We won't get into the details, but it's getting oversold. And if we get the washout move, it is still commodity based. I'm very bullish on hard assets. U.S. Steel.
So
How can we make a lot of money on U.S. Steel? It's a boring company. It's like we can, and I think there's a good chance next week we will. But that's, again, I set it up today, but it's not something we're not going to trade until next week.
So this company, U.S. Steel, I've traded it before. I kind of forgot about it. And it's really, I guess that's one of the cool things about the chat room, that everybody's like looking at different things. But like, isn't this company, and I don't know, like, I mean, I don't know if you know that, that much on the company, isn't this company like, don't they get all the steel from like the Mississippi to the left, like all the steel in the U.S. or like a big chunk, right?
Well, they're the biggest steel company in the U.S. and they used to be the most important company in the world and in the U.S. I mean, it's like the movie The Godfather, where he said, we're bigger than U.S. They're talking about the mafia in the U.S. In Godfather Part 2, he said, we're bigger than U.S. Steel, and that was basically saying in the 1950s, we're bigger than the biggest company in the world, and that and GM were the two biggest companies in the world. It's not that way anymore because we're not an industrial-based economy anymore. But it's still very important, and it's still the steel company, still hard assets, still the most important, and we're still very. We have infrastructure projects are going to be kicking in the next couple of years. That's another thing. We talk about politics. Sometimes we talk politics, but we shouldn't. But that's after the market close and people kind of banter back.
Related to the trade, like
but we talk about what I care about politics is that well, people have to remember where's all this infrastructure spending? It's always been passed. The other stuff passing. When are they going to start building this stuff? Well, again, having 40 years, I know what happens. They pass these things, but they don't spend the money. The administration doesn't spend the money until the third and fourth year of his or her term, because they want to get reelected. And Trump didn't. Trump did all his stuff in the first year. He didn't get reelected. That had to do with the pandemic and other things. But the point is, there's a good reason why guys usually get reelected, because all of the policies that they put in place when they first get elected, they have a good momentum on their cases. It's great. Oh, we got all these things passed. None of it kicks in until the second 2 years because they want the economy improving when they come up for reelection. And that's what Biden did. Now, Biden, he's old. Maybe he won't run again, but he'll still want the Democrats to win. And that's why all this infrastructure stuff is going to get kicked in next year. That's why stocks like U.S. Steel are going to do really well.
Is a company like U.S. Steel kind of part of this new economy with the sanctions and all that stuff? Because I don't know how much steel comes from that part.
Well, yeah, that will certainly become an issue, but it's again, a new economy. It's the epitome of the old economy, but now with this new with what's going on in the world with the supply chain issues and such, yeah, you could call it a kind of a new economy type situation.
Yeah, and what other stocks are you? Well, I mean, this is great that you really have that insight into different sectors and all that stuff. Any other stocks that you want to discuss, or Bitcoin, or what do you how do you see Bitcoin? And also the other thing, now that we're talking about Bitcoin, so like, what do you think about all the people that were saying on the news everywhere, like, oh, this is like an inflation hedge and this and that. So like, what is it then? If it's not then from what we see.
I'm afraid it's a lot like what Kathy Wood had, is that it's a great investment. And it's great long-term prospects, but it got pushed up more than it should have too soon because of all the liquidity in the marketplace. And I am still, don't get me wrong, I am bullish on this. I like it. And I've had some good calls on it, and it made this kind of double top there. But I do think that I'm sorry. I want to get some of these lines out of here because it just gets so busy. The chart is so busy. Let me just take these off here. Sorry. Okay, that looks a little bit easier to look at. See, it's RSI. It's kind of neutral, pretty neutral. That's not a big deal. But it did get ahead of itself. And when it was up here at 60,000 at the end of last, I'm sorry, 70,000 at the end of last year, and I would turn bearish on it and it worked out really on a near term and intermediate term basis. It worked out really well. I turned bullish in here. Right now, I'm kind of neutral because I do believe it's a risk on risk. It's not. We've learned it's not an inflation hedge. And maybe it will become one, but it's really not right now. And so what we're trying to look at is. So now it's really trading on technical analysis. It still has a fundamental story, but we're trying to make sure, where does it go? If it trades, you see how this thing right here, we break below 30,000, that's going to be a big problem, a real big problem. I don't think it does, but if it does, believe me, I'm going to want bearish bets on it if it breaks below that level, because then it's going to drop to 20,000. That's going to present an unbelievable great buying opportunity. Again, I don't think it happens. I think it holds. But near term, we do have to care about, but again, I'll just draw the line here real quick. See how 30,000, it's bounced off 30,000 several times. See, there, got close to it there. But let's look at it a little bit shorter term basis. Okay.
And also, like, after Bitcoin, if you can give your thoughts there on Ethereum as well.
Yeah, I like Ethereum better because I think there's more uses for it. But one thing I am a little worried about here is that, and again, just on a short-term basis, and again, and you see that the way that the stock market is traded, it's kind of like a risk asset. You see here, boom. See how it's the trend line going back to July? It's sitting right on that line. So if it breaks below that, it's probably going to test that 35,000 level. That should hold. So I'm neutral to bearish right now. I'm not going to be chasing it. I'm not going to be buying it right here. Okay. And if you own it, hold on to it. I'm not saying sell it. Even in your trading account, hold on to it. And only if it gets below 30,000 would you want to, on your trading account, try to get a short position in puts or whatever. Hopefully the ETFs will start trading this thing in a way. But you break below here, it's going to test that 35,000 level. This is where you want to buy it again. Okay. And then you use a tight stop. It's a tight stop. So if it gets to 35,000, you add to it, you could use 10%, and then you just bail out of it, because then it's going to drop to 30,000. But see, if you use risk management like that, you're going to be able to get out of it. You'll lose a little money, but you won't lose a lot of money. It gets down to 30,000, and you'll still have plenty of money to say, okay, I'm not going to back up the truck. I'm really going to buy the thing, and it should go nicely higher from there. But that's what happened, is that people thought it was an inflation hedge. It was really more of a risk on trade. And that's, again, with some of Kathy Woods' stocks, they are great long-term trades, but they just got too far ahead of themselves because the momentum and the liquidity, the liquidity jumped in and had to go somewhere and went to mostly into the momentum stocks. They're moving higher, right. And that's what went with them as well.
And if you look at Coin, which kind of trades with Bitcoin, I mean, that was like one of the most, it was very, very expensive, a very expensive IPO, and it's down from like 400 or not. So
yeah, the one thing, this will probably be a good buy on when we get the washout, and if we get Bitcoin down to 35,000. But it's going to be a trade. The one thing, and the reason why is that oh gosh, I'm drawing a blank on his name now, but one of the biggest and most successful short seller in the business is short this stock. It has nothing to do with his opinion. He's been flat out, he's been on TV, nothing to do with his opinion on Bitcoin. It has to do with, he just thinks that, that the competition is going to be easily replicated, and that Coinbase is going to have a tough time. When I can picture him, the guy with glasses. I can't believe I'm drawing a blank on his name. Very, very well known hedge fund manager. And he is, when a guy like that shorts a stock. Now he shorted Tesla and lost his shirt. So he might be wrong on this one too. Bitcoin short seller. Let's see here. I know. Bitcoin. Whoa. I can't believe it's not there. Okay, well, I was trying to get his. Well, anyway.
I think I know who you're talking about, but I forgot his name.
Yeah, I can't believe it, because he's a very well known guy. And I should have the name on top of that. Anyway, so I'm a little worried about that. And again, he's bearish on the stock, not because he's bearish on Bitcoin or Ethereum or cryptos. He's bearish because of their business model. And he's not saying they're unethical. I mean, he was the guy who made a fortune in Enron because that was unethical.
Jim Chanos?
Jim Chanos, of course, that's it. Jim Chanos. Now, again, he was wrong on he's been wrong before. He was wrong on Tesla. Maybe he'll be wrong on this one. But he's made a lot of money in it already. I mean, the stock's down 30% since he went in. So, or since he made his position public. So be careful on that one. I do think it's going to be good for a short-term bounce soon. So keep an eye on it. Does it have options? For some reason, oops, I hit them at the options trade. Hold on, I'm sorry. Yeah.
Hey, bro, really?
Very well, yeah. So we'll be looking at some call options in that one. And just to go on Ethereum that you asked about, it's very similar, but let's still look at it.
Just want to give a quick shout out, MMB1101. Welcome to the family. Let's go.
Thanks for joining. Welcome aboard. Again, I like this one, but again, if it breaks that trend line that we've been talking about, it's really what we call a symmetrical triangle in this one. And if it breaks below that, again, I'm worried that it's going to be, there's some more downside here. But this is what you call a symmetrical triangle, and I'll draw it for you here real quick. And I'll take 2 seconds, bang, bang, bang. Okay, that's the trend line. It hasn't broken that. The Bitcoin is testing its trend line, that trend line. And of course, Ethereum is not. So it's got a little bit more room, and for good reason. It's got more. It's not just a currency. But see, this is what we call a symmetrical triangle pattern. So whichever way it breaks out of that, it's going to be. I do worry it might drop to 2,500, but that's where you want to be aggressive, just like it would be for 35,000 on Bitcoin. So those what am I thinking on those names? Are there others that the people in the chat want, or not the chat, in the?
Yeah, we got a. I mean, those were just a couple there that I want to make sure we hit on. So I'm gonna get a couple tickers here from the chat. And you're all good with what you wanted. I know you wanted to talk about some tickers.
Yeah, I think we talked a lot about them. AMD, Netflix, Bank of America, Devon, JP Morgan.
Okay, all right.
In there, so.
Let's pick up here. Let's see what we can find. We have from the Zoom chat. Okay. So Macy's from Pracha.
Macy's. Okay. We're not gonna just look at Macy's. I'm gonna show you something else too. It's gonna be important. Now here's a stock. Look how it's kind of riding its 200-day moving average. It gets below it, but always seems to regain it. And the stock looks pretty good. They had the CEO on yesterday because he was part of the CNBC draft for this thing. But you see, this stock thing is really more than anything else. It's stuck in a sideways range. And when you get that outlier, I kind of take that away. And this is what I would do. I'll put. Oops, sorry. Let me just show you. This is a sideways range. And so this is one I'm going to stay neutral on. Okay. But when it breaks out of this range, this thing's been in range all year. Okay. And whenever something goes in a multi-month range, when it finally breaks out of that range, it sees a big move in the direction of that break. Now, I'm going to give you an opinion on what I think it's likely to do, which way it's likely to break. But see this? this outlier, I don't worry about that. It's, this is the range. So if the stock breaks below basically 23, I'm going to get very nervous. If it breaks above 28.50, I'm going to get very bullish. Okay, you can see its RSI chart, very neutral, right in the middle. So that doesn't tell us anything. So it's hard to have a firm opinion on this. I like the fact that it keeps holding its 200-day moving average. So one thing that does concern me, though, and this is the XRT retail ETF, so retail stocks, of which Macy's is a part of. Look, that's not looking so good. Not oversold yet. Looks like it's about to make a lower low. So I'm a little worried about that. And also look at the XLY, which is the consumer discretionary ETF, which has all sorts of consumer discretionary needs. Same thing, testing those lows. If it makes a lower low, not really oversold yet. But Macy's is this is a turnaround story, great heritage. So I'm not going to be negative on it, but I do want to wait to break out of that range, 28.50. What did I say, 23 on the downside? I can't remember. It breaks out of that range. That's when we'll jump on the board. And this is one of these situations where I'm like, I don't have an opinion. Let's go back to it. I'll just pull it up here because I'm not going to tell you something that's I'm not going to tell you this thing's got a big move when I really don't know which way it's going to move. It's going to break out of this range. Very good chance. Well, it's going to break out of this range at some point. And when it does, the odds are very high that it will be a big move once it does. But since I don't know which way it's going to go, it's RSI is neutral. It's been neutral for a while. I'm just going to let it sit there and let it trade on its own. And when it finally breaks out, then I'll make the decision. I like Macy's. I just think the former manager is good. I think good management team. I think the odds are pretty good it's going to break out. But let's wait for it to happen. Sometimes you really like to get that bottom. It's like, oh, it's really getting washed out. But when something gets range bound, you can't do that. You have to just let it break out of its range, let it tell us what it's going to do. And once it does, jump on it.
Right. Interesting there. And then we got from Tim, Ford.
Ford Motor, been a very popular one. Oops. Okay, just give me a second here. Sometimes, there we go. Ford. Okay. Now here's one the stock really doesn't look good on the chart. But, and there's a big but. Okay, number one. Again, let's get rid of two of these lines. Now I always have, because I'm used to looking at this. I think some people, not used to looking at charts. You see 15 lines on there. So I have the 50, 100-day and 200-day moving average. But again, the 200-day, because that's about 1 year of trading, is one that almost everybody looks at. But you see here how it held the 200-day moving average there, tried to hold it, fell below it, tried to regain it, and then finally fell, got back up, couldn't break back above it, fell, lower low. So it's higher, lower high, lower low, lower high, lower low, blah, 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 blah. I made another lower low recently. However, it is starting to get oversold. Now, well, it got oversold here and it didn't go down. Okay, but let's look at the weekly. Okay. It's still not quite there yet. So, boy, it's a company I really want to like because they make so much money on those pickup trucks, and it's and they're making the right moves into EV. But it's just with the overall market, and it is a market stock. I do think that it probably has to fall a little bit further before it breaks down. However, this is one of these stocks. If you want to we'll buy some call options in the stock when it gets washed out. But we also, for swing traders, what you'll want to do is you'll want to buy it. You want to buy a little bit when it gets washed out, then you want to keep buying it on the way back up. Because what's going to happen? See, this MACD chart is very wide, and that's again another reason to avoid it for now. But this is a weekly chart. Okay, let me get rid of these other two moving averages. Okay, but see what happens when it sees positive. See that positive MACD cross? Look how much that stock rallied. Okay, it may not. Again, let me make it a little wider here. It may not look like that much on a chart, but on a percentage basis, hello, bang, 45% rally. Okay, big positive chart, a MACD chart. It's weekly there, and it rallied for a year. Okay, so what you do is you buy it when it gets washed out. You add to it when it gets back above 15, and then you get a positive MACD cross on his weekly chart. Then you buy even more, and you sit there and go, okay, great. The stock's at 20. Yeah, I didn't buy it all down at 14, but I used risk management correctly. My average price is 15 and a half or 16, and the stock's at 20. I got a home run here, and I'm going to let it run to 25 and beyond. So again, that's the way I play it. But I'm not quite there yet. Maybe as early as next week, especially if we get a flush move in the overall market. This stock will also get flushed, and we'll look at it for, again, both long-term position and in the call options for a shorter term trade, which may not just be to the end of the week. We may go 2 weeks out, or maybe even 3.
Okay, right. Interesting. We'll definitely follow up with that one. And then we have double trouble asking for XBI.
Okay. Now, this is one that's going to be interesting because we've made some real nice money. I should have probably talked about this, but in LABU, L-A-B-U, which is the 3 times biotech. This is a biotech ETF. The biotech ETF is LABU is the 3 times bullish. We've made some money in that one. We bought some puts. Now see here again. Lower high, lower low, lower high, lower low, lower high, lower low, blah, 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 blah. Even this one almost got a higher high and didn't get it lower low, but it's getting oversold. And let's look at, I tend to trade the IBB, but that's okay. They're both very liquid. And actually this one's more liquid than the IBB. And I really don't know why I trade the other one. But I do like LABU. And the reason for it, sorry. I hit weekly. Oh, there it goes. Okay. See how it's getting oversold? We made some nice money in this a while ago when it got oversold. And it's getting there again on this weekly chart. Let's look at its Bollinger Bands. Probably not quite as extended on its Bollinger Bands. But this is one that, along with a lot of other things, could do. I like the biotech longer term, and even on an intermediate term basis. But Bollinger Bands is not quite there yet. So again, it might be early next week. But I just want to go back to LABU. LABU. Okay, again, it's the 3-time bullish, 3 times, the leverage 3 times bullish ETF. Now look at this though. So that's, again, it's been doing poorly, getting oversold, getting ripe for a bounce. But look at this. Unlike some of these leveraged ETFs on groups, the options are, you see, they're not crazy active, but they're plenty. I mean, you got open interest in the thousands. That's fine. So they're plenty liquid enough for individual traders to get in and buy them. And we've made some real nice profits in those. So if you're looking at this to buy on weakness, I would look at both this ETF and the options on this ETF. One thing though I do want, it's very, very important, I'm glad we had this opportunity to talk about it, is that you have to be very careful with leveraged ETFs because they use options and futures to leverage themselves. And so they are trading vehicles. They are not, you can buy XBI and hold on to it, IBB, any of these ETFs, and hold on to it. If they go flat, if they're flat, you won't lose money. They'll trade flat. However, if you buy a leveraged ETF on one of these groups, if it goes flat, you'll lose money. Let's say 3 people buy the, anyone you want to, XHB, whatever you want to look at it. 3 people buy it. One person buys the ETF. The second person buys the bullish leveraged ETF. And the third person buys the bearish leveraged ETF. It goes sideways for 6 months. The person who bought the ETF is going to neither lose money or win money or make money. Both people who bought the leveraged ETFs will lose money, both of them, okay? Because again, it's time value. They'll have to go into these derivatives and the time decay will cause them to go down. That's why all these leveraged ETFs always do inverse splits. So because they go down, and then they got to put it back up to a level where people don't get panicked about them. But they are very helpful, but just very important. These are a week, maybe 2. That's as long as you want to go on these things. And of course, the options, you'll use the expiration date, but just be careful about that. So if you do like biotech, especially if we get washed out next week, look at LABU, but only hold it for a little while because it's not something you want to hold on to for an extended period of time, because you will get that time decay with its exposure to derivatives.
Right, interesting there. Then we have, let me get this one from Brian Maestas, TLT.
Okay, well, TLT has been a good one. I mean, I was too early on getting bullish on this one. But well, we were able to make some money earlier. Now look at this thing. See, I got bullish and it sold off again today. This thing is, I am bullish on this right now. And it's oversold. It's getting over, look, it's oversold. Oh, this. See how oversold it is on this weekly chart? And even if the stock market sold, people say, well, wait a minute. If you're bullish on the stock market, if you're bearish on the stock market, you must be assuming that interest rates are going to go higher. Not necessarily the case. Look at the TLT. Look when things got really ugly, right? And when we saw the first low, which is at this level, and people really started to get a little panicky in the stock market in late February and early March, what did the bond market do? It rallied because it's a flight to safety. Usually, the bond market looks at the stock market and takes the lead from the stock market. But every once in a while, when the stock market really gets hit hard, just the opposite happens. The bond market follows the stock market, but in a different way, because they sit there and say, oh my God, the stock market has fallen out of bed. I need to get into secure asset, flight to safety. I got to buy treasuries because at least they're backed by the full faith and credit of the United States government. I'm not going to lose my money. And not only that, I buy a treasury bond, I'll get 100% back when it matures, even if it's short term, especially if it's short term. But so people actually go into it. So it is not, as much as crazy as it might sound, it is not, it actually makes sense to think that the TLT would go up when the stock market, it doesn't happen very often, but when the stock market gets crushed, they do diverge in an interesting way. So I'm somewhat bullish. I just think that and I've been saying a long time until now, and we're starting finally to price what the Fed is doing and what's going on in the world, global, with Ukraine and China and everything else. We're finally starting to price it into the stock market. We hadn't been doing that, only doing it very gradually. The bond market getting crushed, not just the TLT. The TLT is the Treasury ETF. We also had the corporate bond ETF getting crushed, the high yields market getting crushed. All these markets have been pricing in what the Fed's doing. The stock market hasn't. And the bond, whenever there's a divergence between the bond market and the stock market, it's the bond market that's usually correct. And so I guess my point is the bond market has already priced in a lot of what the Fed is going to do. So it's getting ripe for a bounce. And it may even happen when the Fed announces that 50 basis point spike, and you'll see the TLT move up nicely. So I would definitely, if you're going to play it, I'm a little gun shy because we lost some money on it last week. Made a little bit back this week, but I'm a little bit gun shy on it. But if we see the TLT move above this week's high, bang, which was 123.03, I'm going to buy. I'm going to be a buyer of TLT calls because that's going to be a clear sign that it's headed higher.
Interesting take there, Matt. All right, so we've gone over sectors, market themes, trade ideas, setups, education, real life trades from the chat room. A couple of beautiful stories like the one from Raj today that just joined Wednesday. And, so that's really good to hear that, man. I know it's the busier it gets, the more volatile the market gets, the better you guys do. But, like what I do here, I talk to a lot of traders. I've talked to thousands of traders since then. And, it's always those two types of traders, Matt. It's the trader that is in the trenches, making the money in and out, both sides. And then there's that other trader who simply, hey, I'm just simply going to step aside until everything seems, perfect to my standards, right?
And that's okay if that's what you want to do. I mean, it's not for everybody, but I do believe strongly that you don't have to be Mr. Sophisticated Trader, whipping around esoteric futures and options all the time to make money as an active trader in the stock market. And we've done very, very well here in the chat room, and I think that we'll continue to do so. And it's just let's over the years, the big guys, the big guns, the institutions have always made money, or not always, but when the market gets killed, we always hear about the big guys that get hurt. But there's also a lot of guys who make, in the institutional side, who make very nice money. The individual trader hasn't been able to take advantage of that in the past, because they were the only ones who could do those trades, because they could do what called over-the-counter options. But the only people, the brokerage firms will only trade over-the-counter options for big guys, because it's very expensive. I'm sorry, it's very risky to do the trades, and unless they're going to pay a really big commission, they're not going to, that only an institution can pay. They're not going to do the trade. But now we have the tools to do it, and again, we've gone over them. It'll be again in both directions. Weekly options, 3 times a week options in the index things. We have inverse ETFs, leveraged ETFs, etc. We can take advantage of it. We do it rightly. We do it with a information based decision, not a wild guess. And it's been there for the institutions for a long time. It's finally there for us. But if you don't take advantage of it, and again, there's some people, it's like, hey, I'm working 12 hours a day and I just don't have time to look at,
right.
Understand that. But for people who do have a little bit extra time and can look at a portfolio, they don't have to be looking at it all day, every day. We got the trades to put in there for you to look at. It can really be a time where you can, instead of getting creamed by the market or just holding on and trying to, withstand and weather the market, you can actually profit from it.
And here's the thing, because as I talk to these traders and from all over the world, keep in mind the Stock Picks Inner Circle chat room where we're trading options all day and everything else. There are people from all over the world, international. It's not only people in the US. There's people from Canada, from Europe, Nigeria, South Korea, Finland. Like I've signed these people up. So, and here's what I'm saying, Matt. There are people that have, emailed and they were like, hey, for example, I thought such and such, just like this example with Raj, where it's like, hey, I didn't think maybe I would have enough time, or I didn't, and then, the day after, you end up making all that money. And it's like, oh, well, now suddenly I do have time, right? So the thing is, you really have to stick to the strategy, because you've been doing this for 40 years, Matt. And there's no way that in this time, we don't have the technology to just plug in 40 years in our brain in the stock market. And that's really the hardest thing to buy experience. Usually when it comes to being successful in things, usually for the most part, it's you're on your own, buddy, right? And really what we do here at the Benzinga Stock Picks Inner Circle chat room is that we all help each other as a community. The people that are a little bit more advanced, or the people that just joined the chat room, right, get help from the other folks that have been there since we started this whole thing, Matt. So I think it's really beautiful to see that come together.
Yeah, it's worked out really, really well, and the people really do try to help each other. I'm telling you, it's because it's not a situation where, again, because we're individuals, there's plenty of room for everybody to get into any of these trades. It's not like, if you're a huge hedge fund with billions and billions of dollars and you're trying to get a trade big enough, well, if everybody else is doing it at the same time, you can't get the trade done. With us, it's not, it's no problem. Again, and that's why we do the liquid things, where if we go in, every single one of us buys a call or a put option, it doesn't suddenly, move the option way against us and make it impossible. We can all jump in if we want, and get out when we want. And it's and so people are fighting with each other, not against each other, and not hiding things from each other, and helping each other out all the time.
Yeah, and that's the thing, like when you start trading, Matt, there's really it's not like, hey, this is your handbook, get out there and have best of luck. It's like, hey, you put money in your account, good to go, right? But really, nowadays, especially with how things are going with the economy, you definitely want to make sure that, you're putting your money to work and you're doing it with the right community, right? Because it's not just about getting the trades. It's about being part of a community, something bigger, because once you have 90 or 80 or around there, set of eyeballs that help each other out, it's a totally different ballgame compared to what you've been doing maybe by trading alone. And I don't suggest trading alone. Definitely.
And we've had some people who've just said, geez, I'm just getting killed this week or whatever. And it's like, well, geez, they're off doing some of their own things, and I'm getting, it's like, and people come in and said, everybody has those weeks, don't worry about it, you know. And that's why I say, when you if you come in here new, you're not putting, oh geez, I've got X amount of dollars, I'm putting it all in the first trade. Do not do that. You know, it's like,
Yeah, that's not the
get your
purpose.
feet
That's
in,
not,
work your way in, feel very comfortable, and you're going to have some tough days. You're going to have some tough weeks. I certainly have had, and I will in the future. But
The
the
way-
whole idea is to be working with each other so that you and again, it's not just somebody that, you know, a blankie. It's just somebody who can really tell you. And then that situation, in a couple of those situations where people come in and say, hey, chill out, don't worry, you're going to have those weeks, let's move on. And you know, I've said that too. And then they feel comfortable, where sometimes not just hearing it from Matt, we're hearing it from 10 other people. And okay, let me calm down, let me just get back into it. And then the next week they have a great week and everything's, I mean, believe me, there were people yesterday.
yeah, going all in is a typical.
Do not do that. Do not, you know, we're not trying to make it all on one trade. And believe me, even if we come in and say, let's say, you know, you've made a huge amount of money, tens of thousands of dollars, and then I see a trade that I think could really just be like FXI. I would never tell anybody, put it all in FXI. I was like, you can make a killing. I say, you've made $50,000 and you want to put 10 in or even 20 in, that's great, but don't put 50 in.
The way that I use it, because I've been following Matt's trades for over a year, but the way that I use the option trades, I put a couple $100 in these calls, right? And then now there's other times, for example, right? Matt's looking at charts and he's, you know, explaining things and all that stuff. And let's say, for example, even if the stock market, the market goes up, you're adding to those puts, for example, because you're waiting for a bigger drop. And really that strategic type of, you know, entry and exit and adding, that's something that I really appreciate, that Matt is literally giving you, hey, I'm adding here, I'm adding here. And if you look at a chart, he's adding at the right places and he's selling at the right places.
Yeah, that's definitely what we try to do. And then, like I said, we don't always buy everything at one price at one time, and frequently don't sell at one price, because you get a big move, especially if it's on the opening. It's like, God, we got a real good profit here. But it's just it's too big of a profit for me not to take at least some chips off the table. But I do think it can run a lot more. So let's take 20% off and see what happens. And then we'll take another 20% off. Or then I say, like, you know something, it's run far enough. We took 20% off a little while ago. Let's take 80% off. Let's take the rest of it right now. Whatever, we play around, but it's a you look at certain levels, and it's, again, it's I don't care what the levels are. At certain times I sit there and go, there's no technical reason to take profits here, but I've got a 500% profit. I got to take something off the table. I can't just, you know, you got to be responsible. And it's like, geez, you know, if it goes up another 200%, and okay, that's okay. I'm okay with that. You know, nobody ever lost money taking profits, and that's why sometimes we piece them in and piece them out.
Yeah, it's important that you also, every time you provide your trade, you provide the reason behind your trade, the education behind your trade, so that people know why you're doing it. And honestly, it's not just about the trades, Matt. People also email me like, you know, when I joined, I really didn't know a thing about options, and now I'm able to understand Fed meetings, bonds, yields, things that are impacting the market today that he never even thought. So he didn't even join for that, but he ended up, you know, learning all these things because, of course, your background, your experience, who you are, and the fact that, hey, these things actually do matter in the market. Stocks don't only go up. So, yeah, exactly. That's very good. Let's see. We have a, well, I don't know how you are with time, that we have another pick here, Matt.
Okay, we'll do another pick, and then we should try to wrap things up here. Within about 3 hours now, so we'll do that. But I love it, but it's at the same time I got to go home and cook dinner. But
no, I get it. No, that's all good. So
I'm joking. But what's the
so the next stock we have here is Affirm.
Again, this is one that's just been beaten down. And, you know, the thing is, it's starting to stabilize, which I like, and it's not made a lower low. But and you know, if we look again, I'm gonna get rid of these trend lines. I'm sorry, these moving averages. Moving averages aren't as important for a stock that's only been public for a short period of time. But look at this. Moving averages aren't as important, but trend lines still can be. I'm gonna do. Okay. Okay, see that? See how it's broken above, even though it's been going down lately, it's still broken above its trend line going back to November of last year. And it has not made a lower low. See how here? So you got lower high, lower high, lower low, lower high, lower low. Oh, la, 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 la. Oh, we almost got a higher high, not quite. Lower low, lower high, lower low. Wait a minute. We got a higher high. This is the first higher high. It's starting to get back down near this March level, but it's still above it. If it can make a higher low, so in other words, higher high followed by higher low, we want to be buying. If it starts inching back up here, we want to, and again, because it's oversold on its RSI, we want to start buying some shares, okay? Don't want to get too aggressive yet. Put it here. I just want to put AFRM. I'm just going to pull up its MACD chart. Hold on. So this is a strategy for just the chart, okay? We want to buy, we're going to buy, if it starts to tick up, we're going to buy it. If it gets above its 50-day moving average, we're going to add to it. See, that's been a tough resistance level. And then if it makes a higher high and MACD cross, and we get a positive MACD cross, see the positive MACD cross, big rally. Positive MACD cross, big rally. Okay, head fake. It was only mild one, so we didn't go after it. Positive MACD cross, big rally. So we're going to look for positive MACD cross, break above the 50-day movement. There's all sorts of potential there. So I don't mind, and if it makes a higher high, if it goes higher low, I'm sorry, higher high, higher low, and then get a higher high. Let me just pull it up here, GP, last one here. So again, that's a lot higher. So I don't want to get it. If it gets above 48, then you're really wrong. But the stock's at 28. But the point is, you're going to be able to build a really nice position. But my real feeling is, I mean, looking at that MACD chart, that's it from the option side of things. If we can get a positive MACD cross, we'll be looking to buy the call options to that name. I'm still not there yet. Again, I'm worried about a washout move next week in the market. But if we can get follow this higher high with a higher low, that's going to be real positive for a firm.
Right. No, interesting take there. And I know that you also do follow up with all these trades. With all these stocks, if there's a particular trade to be made. Matt, I want to thank you, man, for all the time here. You're extremely gracious. I know that, you're definitely not how you are with the other folks, like you are with us here, not just at Benzinga, but with the Stock Picks Inner Circle chat room. You really go a lot for the folks. And, again, I get all these emails of people, hey, tell Matt thank you, tell Matt thank you. I don't know if he can read this or not. So I just wanted to give, because Raj was pretty, he just really wanted to thank you. So that happens quite often, but good stuff. Shout out from all the members. Shout out from myself, Matt. Thanks for being here. I have a little Q&A here and I'm going to show them some of the things from the chat room.
Perfect.
Great having you here.
Thank you very much. I hope people will stay on and get a little bit more details about the chat room and stuff. And for those who joined, good luck. And I'm looking forward to having you on Monday. I think next week's going to be a real fun and profitable week for us. And we're going to work real hard to make it both. Have a great weekend, and we'll talk to you next week. Thanks, Rodrigo. We'll talk to you soon, buddy.
All right, man. Sounds good. So there you go, guys. We have Matt Maley, Chief Market Strategist at Miller Tabak. He's been doing that for 14 years. Before that, he was Director of Trading at Merrill Lynch. He managed BlackRock and Fidelity, two of the biggest accounts in the world. And prior to that, he was trading at Salomon Brothers, which is one of the biggest, trading desks, like Matt mentioned, during the 70s, 80s, and 90s. And they were acquired, I believe. That's Matt Maley, definitely an interesting gentleman, very experienced. A lot of, as you guys, saw, this was a 3-hour session. We were only supposed to be here for an hour, to be honest. But sometimes, Matt gets on a roll and, we just let him go, right? He's very good at this stuff. And he does this every day he goes through trades with members in the Inner Circle chat room. So I wanted to show you guys a little bit here. I don't know if any of you folks have like a PDT rule, but for example, Tammy here in the chat room, she said, hey, I sold this was today. I'll show you right here, 4 p.m. So sold my SPY put for 120% gain, used my last day trade for that, was a better choice. So, even if you have a PDT rule, that really doesn't, that doesn't mean you should think that you can't do these things, right? And there's a couple other, but I mean, today was a really great day at the chat room. Whenever there's volatility, we're always really there actively. And I suggest you're actively there because these calls and puts can go up a lot very quick or go, like the price itself, right? So you always want to make sure that, hey, Matt since is doing a sell alert, that you actually can read that sell alert. The other thing, if you have a full-time job or something like that, because I know people that do and have the chat room and use it every day, all you have to do is have this tab open, really, this premium chat tab open, and that's it. You can put sound alerts in this chat room. We just added this stuff for you guys. Right now, there's no, because it's muted. If I click it again, you see the yellow, it gets like yellow. So that means that the alerts are there. That's a sound alert that you get. So in this inner circle chat, this is where everybody's posting, including Matt, right? So after that, this is where everybody's talking. If you want to get Matt's trades, Matt's direct input and updates, market commentary, which is important, what he's adding, what he's buying, what he's selling, he'll put it in both chat rooms. But honestly, for the most part, you really want to look at it here, to be honest, because only he can post here. So that makes it a lot more organized, much cleaner, a better look, and it's just easier for you to get your entries and exits. It saves you time, and in this, time's money, how it is. So this is way easier for you to pretty much see, hey, if I'm buying or selling this, all that stuff. Also, market commentary, he's talking here about how important the next 5 to 7 days. Like he wrote this yesterday. So this is what he was talking about when he was talking about why these next couple days, weeks, this next week in particular is going to be very important. So this is Matt's important messages. This is where you're going to see all this sort of stuff, right? Wherever Matt is posting. So if anybody does have questions, just reach out in the chat. We'll put that there for you guys. Again, it was a good session here. And for those that did join, we'll see you in the chat room. It'll be open tomorrow. It's open all day, every day. But Matt is there Monday to Friday, 9 to 5. Jay Killinger, good question. Is this recorded? So it's for the inner circle members, they do have access to the recordings. But for everybody else, you guys were just able to watch it live here. So if you do have any further questions or anything like that, feel free to reach out. We're putting the contact in the chat so you guys can reach out. So so thanks a lot, guys, for joining here. Again, have a happy weekend, happy Friday, stay safe, all right? And make sure that you do your research, right? You're doing everything that you need to do as a trader to stay ahead. And if you're part of the Inner Circle chat room, make sure that you're there in the morning on Monday, because Matt will have a post in the morning that he's going to be putting out based on what has happened throughout the weekend. So very important for you to check that out. So, all right, guys, thanks for being here, and we'll see you guys next time.
Thank you.